Good morning, students. Welcome you all once again in the live virtual lecture of Board of Studies of ICAI. So, students, today we are going to take fourth class on Ind AS 115. Friends, up to now, in the last three classes, we have covered three steps. Step number 1, identification of contract with the customer. Step number 2, determine the performance obligation. Step number 3, determination of transaction price, right? So in determination of transaction price in the last class, we have covered three concepts, right? We understood what is meant by transaction price, and we have covered three concepts of transaction price. We have covered that how to determine the transaction price in case of a variable consideration, right? And we have also discussed how to determine the transaction price when there is a significant financing component. Then you have to split your normal transaction price with the significant financing component. Okay. Then what is the non-cash consideration? In case of a non-cash consideration, how the transaction price is going to be determined. And we have seen that transaction price is the amount which the entity expects in exchange of transfer of goods and services to the customer, excluding amount collected on behalf of the third parties, right? And we have done some examples to understand what is meant by transaction price. For example, if you are purchasing a goods from an entity, right, and that the entity is charging 1000 rupees for the goods and 18% GST, 1180 rupees in total. So what is the revenue for that entity? What is the transaction price for that entity? Is it 1000 rupees or 1180 rupees?
1000 rupees.
1000 rupees, because 180 rupees this entity is collecting as a GST on behalf of the government. That is not the transaction price for this entity, right? And in variable consideration, we discussed that the consideration which is dependent on the future outcome or events is known as a variable consideration, right? And while considering the variable consideration, all the constraints needs to be considered, right? And you need to estimate the variable consideration by two approaches. When there are multiple outcome of an event, then you need to apply probability weighted approaches, which is known as expected value approach. If there is a binary outcome, either it will happen or either it will not happen, then you have to apply most likely approach. Okay. And we did few illustrations also to understand the variable consideration. Then we discussed the concept of significant financing component. Significant financing component means when the time value of money is important, when the time value of money become involved, right? And when I'm talking about significant financing component, when I'm talking about time value of money, what is this significant financing component? It's a difference between the price paid, means the price of goods and services, so the consideration received, and the fair value of the goods and services, right? So it's a difference between fair value of goods and services and consideration received. Okay. And of course, this significant financing component will become important, will exist only when there's a difference between the timing of collection, the timing of consideration received, and the timing of goods and services transferred, right? And that timing should be beyond how many period? Beyond
1 year.
1 year.
beyond 1 year, beyond 12 months, right? That timing should be beyond 12 months. Okay. So friends, we discussed this concept, and we also discussed the concept when there is an advance received, when there is a payment in delay, right? So we did all these concepts. We understood that if even the advance is paid by the customer either to secure the order, like in case of automobile, in case of buying a car, you guys are paying some 10,000, 20, 30,000 rupees. In case of booking a flat, you guys are paying some advance. Okay. So these are just to secure the order. Okay. So in that case, these kind of advances, while there is a difference between the timing of money paid, to say collection received, and the goods and services transferred. So this will not be considered for this significant financing component. Or for example, when you got some work done from the contractors, you are keeping some retention money, right? So that retention money is to ensure that if there is some problem in the desired time, then that contractor will get these repairs done. Or if the contractor will not get these repairs done, of course you have blocked few retention money like 5%, 10%. You blocked some money, and that is why it will also not be considered as a significant financing component. Okay, why? Because it is for ensuring the quality. Okay. So friends, then we discussed non-cash consideration, the concept of non-cash consideration. And non-cash consideration means barter. You are not collecting money. What you are collecting some goods and services or some asset, right? In that case, what is the first preference for recognition of revenue in terms of computation of transaction price? Your transaction price is, you are not receiving money, you are not collecting money. What you are collecting goods and services. So the fair value of the goods and services collected will become the transaction price. Okay, it will become the transaction price. What happens if the fair value of the goods and services is not known? Then
Fair value of the asset given up.
fair value of the asset given up will become your transaction price. Okay, but always the first preference is the fair value of the goods and services collected, right? So what we are getting from our customer, simple. So the simple one is we are getting money from our customer. So what is the fair value of the money? Customer is giving us 1 lakh rupee. So what is the fair value of 1 lakh rupee? 1 lakh rupee. 1 lakh rupee itself is a fair value. The money which you carry, the currency which you carry, the currency is already at fair value, right? But instead of money, that customer is giving you some goods and services. Then what is your transaction price? The fair value of those goods and services. Money is also goods, right? Cash is also goods. Okay. So, but instead of cash, he is giving you some other form of cash. So then the fair value of those goods and services. Okay. So we also did examples around understanding the concept of transaction price. Okay. Now we are moving to consideration payable to a customer, the fourth concept we are moving into. And before moving into the fourth concept, let me cover one questions from non-cash consideration also, and one questions from principal agent or consignment related thing, right? So I am moving to board of studies material, and please let me know if this board of studies material is visible to all of you. Please let me know.
Yes, sir. Visible, sir.
Visible. Okay. And I can see many students have joined. So good morning, Ankit, Sanjay, Udandam, Chitra, Leela, Bibhu, Neha, Saminathan, Anushi, Leela. So good morning, everyone. Yes. Friends, illustration number 25. I think it is visible to all of you. And friends, I have also requested ICAI to conduct one more session on Index 115 to discuss more and more illustration as well. So they have kept one additional session on this Sunday evening 6 to 9. Okay. So the communication will be, of circulated, but communication has came to me yesterday evening. The confirmation has been received. It will be circulated to the portal also. But just to tell you guys that I'm also taking one more session on this coming Sunday 6 to 9 on Index 115. Okay.
Okay, sir.
Yeah. So manufacturer M is the manufacturer, enters into a 60-day consignment contract to ship 1,000 dresses to retailers A store. You understood the consignment concept? Consigner, consignee. You guys understand the concept of consigner, consignee?
Yes.
Yeah, you are familiar with these. You are familiar with these words. Okay.
Yes, sir.
Yes. So manufacturer M enters into a 60-day consignment contract to ship 1,000 dresses to retailer A's stores. Retailer A is obligated to manufacturer M 20 rupees per dress when the dress is sold to end customer. Important line. What is important in this line? क्या important है Saminathan? So what is important here,
Obligated
Swaminathan?
to pay.
Sir, here the important is that when the retailer sold, then only he is responsible to pay the money to the manufacturer.
Yes. So the important line is till the time these dresses are lying with retailer A's store, he is not obligated to pay any money. He is acting in the capacity of an agent, right? As a consignee. But when he sold the dresses to the end customer, he is obligated to pay 20 rupees per dress. When he will be able to sold the goods to the end customer, right? Otherwise, he is not obligated to pay any money. Right, Ankit?
Yes, sir.
During the consignment period, means 60 days period, manufacturer M has the contractual right to require retailer A to either return the dresses or transfer them to another retailer. And what is manufacturer M has a right? So manufacturer M has a contractual right. He can say, he can ask retailer A to either return or to transfer to the other store. Okay. Manufacturer, because this manufacturer M is acting like a principal, correct? Manufacturer M is also required to accept the return of the inventory. Okay. State when the control is transferred. Tell me. In these cases, tell me when the control is transferred. Means when manufacturer M will recognize the revenue.
When goods are sold to outside.
When sold.
Sir, here the he will have the when the goods sold by the retailer to the end customer. See, the manufacturer M also has a right to receive the return when the goods is not sold by that particular retailer, so that the control is not fully transferred to the retailer. So things control is retained by the manufacturer itself. Hence, he has to recognize the revenue when it's the retailer sold the goods to the end customer. That time only.
You're right. So
When
in
he return to another retailer,
when he transferred to another retailer.
yes, sir.
Okay.
Sell it or return it.
Okay. So in this question, there are three events. Event number one, this manufacturer M is transferring these goods to the retailer A. Event number two, when retailer A is selling these goods to the end customer. Event number three, when this retailer A is transferring the goods to another retailer on the request of the consignor, right? And out of these three situations, the question is asking that what is the triggering date? What is the time? What is the event when the control is transferred from manufacturer M umbrella to other ones, to the customers, right? So in this case, as you guys have rightly mentioned, when the goods are sold to the end customer, because this retailer A or some other retailer A or some other store, probably these all are acting like an agent. Okay, these all are acting like an agent. Okay, so if the clarity in the question is given that retailer A is acting as a consignor, as a consignee, and when he will transfer the goods to the other retailer, it will also be considered as a sold, right? In that case, of course, two events. One, retailer A is selling the goods to the end customer. That is the trigger. Trigger number two, when the retailer A is transferring the goods to the another retailer. Okay. But in this question, the question is silent. So what is the triggering date? The triggering date is when the dresses are sold to the end customer. So what is the solution which is given in the question? Let me read that in the material. Manufacturer M determines that the control has not been transferred to retailer A on delivery for the following reason. Retailer A does not have an unconditional obligation to pay for the dresses until they have been sold to the end customer. Manufacturer M is able to require that the dresses to be transferred to another retailer at any time before retailer A sells them to the end customer. And manufacturer M is able to require the return of the dresses or transfer them to another retailer. Manufacturer M determines that the control of the dresses transfer when they are sold to an end customer. That is, when retailer A has an unconditional obligation to manufacturer M and can no longer return or otherwise transfer the dresses. Manufacturer M recognizing revenue as the dresses are sold to the end customer. Exactly what you guys are telling, right? So when the goods are sold to the end customer, then we can say that control has been transferred. Okay. Yes. Let me also solve one more question on consideration payable, non-cash consideration. This illustration number 29 I have covered, 30 I have covered. This measurement of variable consideration, this concept we have covered, right? Expected value approach concept we have covered. How to compute the probability weighted approach. Correct. Just a minute. Right of return we have covered. You remember right of return concept? Right to recover an asset and refund liability we have created.
Yes, sir. Covered, sir.
Warranties we have covered. Assurance warranty and service type warranty. So
yes, sir.
Normal warranty and extended warranty. This and illustration number 35 we have covered this illustration, right? This we have covered. Now, significant financing component, this illustration we have covered. Yes. Advance payment and late payment, this we have covered. Sales-based royalty. A software vendor enters into a contract with a customer to provide a license solely in exchange for a sales-based royalty. A software vendor enters into a contract with a customer to provide a license, right? So a vendor provide a license to the customer, sold the license to the customer. And in lieu of selling license, what this vendor will get? This vendor will not get the upfront money. This vendor will get the royalty based on the sales done by the customer. Okay. So he is transferring goods now and he is getting royalty. Okay, for the future. So in this case, is it a significant financing component in the contract?
No, sir.
Why no?
So they are only the exchanging that license. The other person is providing the royalties, right?
So basically, this is kind of a variable consideration, right? For example, if this software vendor has given a license and this customer will not be able to make any sales, right? Whether this vendor is entitled for any amount, answer is no. Second, when the sales will happen and how much of the quantum of the sales will happen, it is depending on the future outcome. It is depending on the happening or non-happening of some future events, right? So it is not a significant financing component. Financing, as the word suggests, what is a financing? It's a kind of a fixed amount. It's a kind of determinable amount or determined amount, right? So when you are getting a financing from a bank, you are aware that I am taking so much of a loan, right? When somebody is funding you, that amount is determinable or that amount has already been determined, right? So the point is in this case, this is not a significant financing component. This is a variable consideration which may be vary depending on the quantum of the sales. Okay, so this is not a significant financing component. Now Non-cash consideration. Yes. Illustration number 48. An entity enters into a contract with a customer. I hope this illustration number 48 is visible to everyone.
Yes, sir.
Yes, sir.
Visible.
Yes, sir. Visible, sir.
Okay. An entity enters into a contract with a customer to provide a weekly service for 1 year. So, what is the contract? The contract is to this company will provide a weekly service for 1 year. Okay. The contract is signed on 1st April and work begins immediately. The entity concludes that the service is a single performance obligation. Okay. This is because the entity is providing a series of distinct services that are substantially the same and have the same pattern of transfer. Okay. The service transfer to the customer over the time and use the same method to measure progress. That is a time-based measurement of a progress, right? You understand this line? You understand this concept that entity
sir.
conclude that service
Yes.
is a single performance obligation. For
Yes,
example,
understand.
I am teaching you. So teaching is a single performance obligation, right? But how will I measure my revenue? I will measure my revenue on the basis of over the period of time. Okay. So
Yes, sir.
because I am providing a series of distinct goods and services, like security guard services, cleaning services. The maid is coming to your house, right? And the maid is providing a cleaning service every day. Cleaning service every day. So, for example, yesterday, maid has come to your house for doing the jhadu pocha, for doing the cleaning, right? And today the maid will come and today she will also do the cleaning. So my question is, yesterday in your house there were some guests, right? Yesterday. The maid has come to your house and she has not cleaned your house properly. Okay. The guest came and of course the house was not properly clean. So you didn't like that. And now today maid will come and today she is cleaning fantastic. But the point is, whatever the impact it had yesterday, whether that impact can be corrected today? Answer is
No,
no.
sir.
Answer is
No,
no.
sir.
Means the yesterday cleaning and today's cleaning is a distinct service, is a different service, right? Is a separate service. Okay. It's a distinct service. But whether that maid will recognize the revenue every day? Answer is no. In the case when the services are single performance obligation, when they have a series of distinct services, then of course there is a mechanism, there is a method which says that you have to recognize the revenue over a period of time, right? For example, newspaper vendor is giving you newspaper every day, but whether he is recognizing revenue every day, so he is charging you invoice, he is charging you or he is giving you invoice on a daily basis or on a monthly basis?
On a monthly basis.
Monthly basis, sir.
But he is giving you newspaper daily. So there is a mechanism. So basically, he used to recognize revenue, he used to invoice you on a monthly basis. Maid, whether maid is charging you money every day or she is charging you money on a monthly basis?
Monthly basis.
On a monthly basis, but she is giving you service every day. Salary, the employee is providing the services to the company, right? Whether employee is recognizing revenue every day, he is getting the salary every day, or he is getting a salary on a monthly basis?
Only monthly basis.
On a monthly basis.
Even electricity, water supply.
Yes, in electricity, water supply. So what is this? Everyday service and goods are distinct goods and services, right? And what I have told you, if there is a distinct goods and services, it is a separate performance obligation and revenue has to be recognized for every separate performance obligation, right? But in all these cases are about the services, or these cases are about the kind of a goods and services which has the same pattern of transfer, right? So in case of services, while services are distinct services, but the revenue has to be recognized over a period of time, having some mechanism like weekly, fortnightly, monthly, quarterly, half yearly, right? This is how the companies are recognizing revenue. Okay, right? So friends, this company is providing a weekly service for 1 year. Contract is signed on 1st April. Work begins immediately, and the services are single performance obligation, but services are distinct services. So service number 1, so yesterday cleaning of house is not interdependent with today's cleaning of house. Yesterday was separate, today is separate, right? In exchange for the services, the customer promises its 100 equity shares per week of service, a total of 5,200 shares for the contract. The terms in the contract requires that shares must be paid upon the successful completion of each week of service. So in this question, what is the consideration which is received from the customer?
Equity share.
Equity shares.
How much equity share on a weekly basis?
100 equity shares.
Equity shares on a weekly basis, right? So this entity will recognize revenue every week, right? This entity,
Yes, sir.
Yes.
this entity is getting a consideration every week. This entity will recognize revenue every week. Every week services, one service obligation, one performance obligation. How should the entity decide the transaction price? Tell me. In this case, there is no money involved. There is an exchange of shares. The customer is issuing the share capital. The customer is issuing its shares in lieu of getting the service.
Sir, fair value of the share as on date of transfer?
After each week.
Yes. So the fair value. Oh, sorry. I think that question has gone now. Yes. The fair value of the services. Sorry, the fair value of the services or fair value of the share?
Fair value of shares.
Fair value
Fair
of the
value
shares.
shares.
What we are getting from the customer, right? So yes,
sir.
you're right. The entity measures its progress towards complete satisfaction of the performance obligation as each week of service is complete. Okay, so this is single performance obligation to recognize the revenue. To determine the transaction price and of course the amount of revenue to be recognized, the entity has to measure the fair value of 100 shares that are received upon completion of each weekly service. Fair value of 100 shares. The entity shall not reflect any subsequent changes in the fair value of the share received or receivables in the revenue, right? Or receivables in the revenue. Is that clear? So this is what you are saying. So at the time of transfer of the services, the entity needs to look at the fair value of the shares received. Okay, this will become the transaction price and this will become the revenue. Now friends, we are moving to the next concept. And what is the next concept?
Consideration payable to the customers.
Consideration payable to the customer. Consideration payable to the customer. What is meant by consideration payable to the customer? Can you have any real life example on this? Anyone? If you don't have, then no issues. But
Sir, the cashback offer I received from the Google Pay, that Paytm, all these things. Immediately I received it. 51 rupees, 1 rupees, or 10 rupees, like that.
very good example. Very good example. Yes. So when I'm paying for a goods, right? So I'm getting a cashback immediately, right? So, and I can take a typical example of Raymond's. You heard about Raymond's? Raymond's, आपने
Yes,
सुना
sir.
है ना?
Yes, shirt and
Yes, sir.
trousers.
Raymond's clothing brand. Okay.
Yeah, clothing brand.
So clothing brand. Recently, I purchased a house, a flat. So there was a housewarming. My wife told me that you have to purchase kurta pajama from Raymond's. I said yes. I went to the Raymond store. And that kurta pajama was costing me 10,000 rupees, that cloth. Okay. Then I asked the store, the salesman is there any discount? He told me, no, sir, there is no discount. But he told me, sir, there is a promo code, right? There is a coupon. So if you apply that coupon or promo code, you will get a discount of 1,000 rupees. You have to do a registration on a website, and you have to just, put some feedback. Okay. And of course, good feedback, right? So you will get a discount. You will get a discount, not exactly discount. You will get a cashback, immediate cashback or off for 1,000 rupees. So now the question is, the sale price is 10,000 rupees. Okay. 1,000 rupees is getting returned to the customer in the form of a discount coupon or cashback. In the form of a discount coupon or cashback, right? So if I think from the Raymond perspective, because I am the customer and you are learning this standard in the books of Raymond's, right? So Ind AS 115, you are learning from the perspective of Raymond's in this example, not from the perspective of Alok Garg. Yes or no? So you are the auditor of Raymond's and you are looking at this transaction from the Raymond side. 10,000 rupees you have collected, 1,000 rupees you have paid, right? So the question comes, what should be the revenue? I mean to say, whether the revenue is 9,000 rupees or whether the revenue is 10,000 rupees and the cost is 1,000 rupees. Means you need to book an expense of 1,000 rupees and revenue of 10,000 rupees. What you are required to record? Means on the top line, you are required to record the net revenue of 9,000 rupees or a revenue of 10,000 rupees along with an expense of 1,000 rupees. What is the answer? Tell me.
Revenue along with expense.
Revenue of?
Revenue along with expense of 1,000.
Means you are saying I will recognize 10,000 rupees of revenue. I will recognize 10,000 rupees of revenue and 1,000 rupees of expense. That is what you are saying?
Yes, sir.
So we net off and record 9,000 as revenue.
Okay, so you are saying net 9,000 rupees of revenue. Anyone has a different view? Yes.
Sir, when the control not obtain the goods and services, then we can put it as we can reduce from the revenue. Say example, here is a 10,000 minus 1,000, 9,000 can be the revenue. When the control taken back, which means that then the revenue should be recorded 15,000, cost should be recorded separately 1,000 rupees.
Tell me in this case, if Raymond's has given me 1,000 rupees for the registration on a website, has I given any distinct goods and services to Raymond? Raymond has given me clothes. Raymond has given me kurta pajama. But has I given anything to Raymond's?
Promotion.
So promotion is a different aspect, right? So promotion means, I've just registered on a website, right? So it's a kind of very intangible thing. Okay. So the point is there any distinct goods and services which I have provided to Raymond's?
No,
Answer
sir.
is no. There is no distinct goods and services. There is no distinct goods and services, right?
Yes, sir. In this case, we need to record, we reduce that discount, then 9,000 will be the revenue.
So standard says that if the consideration payable to a customer results in no distinct goods and services, then the amount payable should be reduced from the revenue or the transaction price. Friends, let me give you one more example. Have you ever visited any Mega Mart or any this what should I say, like D-Mart and Big Bazaar? Big Bazaar nowadays it is no more, but Big Bazaar, Reliance Fresh, D-Mart. Have you ever been to these kind of stores?
Yes, sir. D-Mart, Reliance Fresh visited, sir.
Yes. For buying any grocery or some other items. Okay. So you must have seen a lot of brands which are there on the shelves of these stores, right? So let's say PepsiCo is saying that if you will put the bottles in the front line, if you put my bottles when the customer enters into your store, and in your first shelf, if you will put my bottle, I will pay you 5 lakh rupees. Okay. So the question is, see, whether the goods and services are distinct or not, it comes through a control. It comes through a control. Okay. What is the definition we have read for the distinct goods and services? The goods and services should be distinct individually and within the context of the contract also. You remember those two definitions?
Yes, sir.
When the goods and services are distinct, the goods and services are distinct individually when the customer is able to get the benefit with the readily available resources. Number two, when the contract of goods and services is such that it is not highly integrated, customized, interdependent, complex, right? We discussed now. If it is highly integrated, highly interrelated, highly interdependent, customized, then that goods and services will not be considered as distinct goods and services. Okay. So friends, PepsiCo is paying PepsiCo is collecting 1 crore rupees from selling Pepsi to this retail store, to this mega store. And PepsiCo is paying 5 lakh rupees if he kept the bottle in the first line of the shelf. Okay. So the question is whether the revenue which is recognized in the books of PepsiCo, is it 1 crore minus 5 lakh, which is 95 lakh, or is it 1 crore revenue and 5 lakh rupees of expenses?
95 lakhs.
Rupees of expense.
Friends, again, whether PepsiCo is getting any control, that guy is putting this in the first shelf, but whether PepsiCo is getting any control over that shelf, answer is no. It is within the premises of the customer. Tomorrow, if the customer wants to move this to another shelf, we can do that, right? So PepsiCo is not getting any distinct goods and services. PepsiCo is not getting any control over that goods and services, right? In that case, the revenue has to be the net revenue. Whatever the consideration is payable to a customer, it has to be netted off. But what happened? Let's say, now I'm taking my example. So PepsiCo told this mega store that, you have to pay me 1 crore rupees for this Pepsi, right? And I'll pay you 5 lakh rupees if you allocate a dedicated space to me, near your entry gate, and one of my person will sit there, right? And that space will be dedicated to me. That 50 square feet space will be dedicated to PepsiCo. We'll have our banner, we'll have our team member also, right? We'll have our employee also. In that case, tell me, is it a distinct goods and services, or it is not a distinct goods and services?
So it's a distinct good and services. So we'll book the revenue of 1 crore and expense of 5 lakhs because it is transferring a area of land for it. No.
Yes. So in this case, by sitting its employee, by having a dedicated space, by getting into a contract, this PepsiCo is getting a distinct goods and services. This customer is also giving some services to the PepsiCo. The customer is providing some space to the PepsiCo, right? Where his person will also be sitting. Okay. So in this case, the revenue is 1 crore and this 5 lakh has to be recognized as an expense for the space. Okay. Right, in the books of PepsiCo. So what this standard says that if the consideration payable to a customer results in no distinct goods and services, the amount payable should be reduced from the revenue or the transaction price. But if it is resulting in the distinct goods and services, then the gross revenue and cost needs to be recognized separately. Okay, friends, if the gross revenue and cost needs to be recognized separately, in that case there are two scenarios. Scenario number one, consideration payable to a customer is equal to or less than fair value. Consideration payable to a customer is equal to or less than fair value. Means the company is paying a consideration to the customer, and this consideration which I'm paying to my customer, it is either equal to or less than the fair value of the goods and services received. Okay. In this case, the cost needs to be recognized for this amount. The cost needs to be recognized. Consideration payable to a customer is more than the fair value, right? So whatever I am paying to my customer, it is more than the fair value of the goods and services received. In that case, whatever is the excess, that needs to be reduced from the transaction price. Let me explain with the help of one example. Neha is my student, okay? And of course, Neha's parents, they are in the business of furniture, okay? Manufacturing and selling furniture. So Neha came to me and she asked, "Sir, I want to take FR classes from you." I told, "Okay, Neha." She asked me, "Sir, what is the coaching fee? What is the fee?" I told 10,000 rupees. Okay. So I am charging 10,000 rupees from a student. Hypothetical example, right? I don't run any coaching class. So then Neha told, "Okay, sir." So while discussion, she told me that her father is into the business of furniture manufacturing. So I told Neha, "I need some chairs." Okay. So since your father is into this business, so instead of paying fees, can you, so of course, can you, pay through a chair? Means 10,000 rupees, Neha, I have to take from Neha 10,000 rupees and I have to pay for the chair. Okay. So you understand up to this level, you understood what I'm trying to explain?
Yes,
Yes,
sir. Understood.
So
yes, sir.
she has given me one chair. Okay. And the fair value of the chair is 5,000 rupees. Okay. And I have collected 10,000 rupees from Neha and I have paid 5,000 rupees to Neha. So in this case, what is my revenue and what is my cost? My revenue is 10,000 rupees and
10,000
my
cost
cost is,
5,000.
means I will recognize that as an asset. Cost का मतलब मैं expense recognize नहीं करूंगा. Asset है तो मैं क्या recognize करूंगा? Asset recognize करूंगा, not the expense. So in this case, I will recognize 5,000 rupees as a cost of the asset and I will recognize 10,000 rupees as a revenue. Why? Because whatever I'm paying consideration to Neha, who is my customer, is, so whatever I'm paying, it is equal to the fair value of the chair. It is equal to the fair value of the goods received. Second example. So I am paying 7,000 rupees to Neha. So what I am collecting 10,000 rupees and I am paying 7,000 rupees. The fair value of the chair is 5,000 rupees. So what does it mean? Why I am paying 7,000 rupees for the 5,000 rupees goods and services? Why I am paying 2,000 rupees extra to my customer?
Sir, that 2,000 will be reduced from 10,000. Have we charged extra 2,000 in that 10,000?
So friends, if I am paying extra to my customer, what does it mean? It means I am giving discount. I am giving discount to my customer. It means I am very happy with the chair she provided me. So I have given 2,000 rupees of discount from my coaching fees of 10,000 rupees. So in that case, whenever an entity is paying to a customer for more than the goods and services received, that more amount will be deducted from the transaction price. इसका यही मतलब हुआ ना, मैं 5,000 की चीज के 7,000 रुपए क्यों दूंगा अपने कस्टमर को, right? So standard says that if the consideration payable to a customer is equal to or less than the fair value, then whatever consideration you are paying, that is the cost. But when you are paying a consideration to the customer which is more than the fair value, then the excess needs to be reduced from the transaction price. then the excess needs to be reduced from the transaction price. Is that clear? Is that clear? Clear or not clear?
Yes, clear.
Yes, sir. Clear.
Okay.
Yes, sir.
Again. So one more example. A Limited has sold laptop to Ayush, a customer, for rupees 50,000. Ayush is my old customer, old student, right? So standard पढ़ाते पढ़ाते मैं भी student को customer बोलने लग गया, right? So Ayush is my old student. A Limited has sold laptop to Ayush, who is a customer, for rupees 50,000. The company has also bought a chair from Ayush at a consideration of 10,000. Determine the transaction price in below circumstances. So A Limited has sold laptop to Ayush. Ayush is a customer for A Limited. At the same time, A Limited is also purchasing furniture from Ayush, right? And what is the transaction? 50,000 rupees is the price of laptop. And the consideration payable to the customer, who is Ayush, is rupees 10,000. Okay. Now we need to determine the transaction price. Situation number one, scenario number one. The fair value of the chair is 12,000 rupees and we have collected 10,000 rupees. Tell me, what will be the revenue and cost in this case? The consideration payable to a customer is 10,000, but the fair value of the goods and services received is 12,000. बताओ रेवेन्यू कितने में रिकॉर्ड होगा?
10,000.
12,000.
What 12,000?
10,000. sir. We will get discount with
First of all, tell me, what is the amount of laptop? 50,000.
50,000.
50,000.
50,000
Just-
plus 2,000. It will be 54,000.
Go step by step. Just hang. So the company A Limited, which is selling laptop to the customer, the transaction price is 50,000 rupees.
It will be 40,000.
And A Limited is selling. A Limited is selling laptop to the customer Ayush for 50,000 rupees. And A Limited is also paying money to Ayush, collecting 50,000 and paying 10,000. So what is the total? What is the total exchange of cash?
40,000.
Collecting 50 and paying 10. Net exchange of cash is 40,000. Net inflow is 40,000 in the books of A Limited. Correct? Net inflow to itna hi hai na?
Yes, sir.
Yes. So one thing is very much clear. That the revenue and the cost net recorded should be 40,000. 50,000 is received and 10,000 is moved out, right? Standard says that whenever an entity is paying a consideration to a customer and that consideration is for distinct goods and services, means the goods and services sold and the goods and services received are different, okay, separate. In that case, you need to see two things. If the consideration payable to a customer is equal to or less than the fair value of the goods and services received, then whatever consideration you have paid, that has to be recognized as a cost of the goods and services received, right? But if you have paid extra, it means you have passed on the discount to the customer. In that case, whatever you have paid extra, that extra will be reduced from the transaction price of the goods and services sold to the customer. हमने जो कस्टमर को 50,000 का लैपटॉप बेचा ना, अगर हमने कुछ एक्स्ट्रा कलेक्ट किया तो हम क्या करेंगे? 50,000 में से डिडक्ट कर लेंगे. क्यों? क्योंकि मेरा रेवेन्यू तो हमेशा नेट ऑफ डिस्काउंट होता है. ओके, सो इन दिस केस एनालिसिस, the consideration payable to a customer is for distinct goods and services, which is chair. Hence, revenue needs to be recognized at gross value and cost needs to be recognized separately for consideration payable to a customer. In this case, the consideration paid to customer is equal to or less than the fair value of the goods or service received. Hence, the cost will be the actual amount of the consideration paid. So, what is the accounting entry? Expense oblique asset, chair account debit 10,000 rupees, bank account debit net 40,000 rupees, to revenue 50,000 rupees, right? So, revenue 50,000, cost 10,000. Is this example clear or not clear? Please tell me.
Yes, sir.
Anushi, is that example clear to you?
Yes, sir.
Is it clear now? So 12,000 was the fair value. 12,000 was the fair value. So Anushi, think from your perspective. If I mean to say, think from the customer perspective. This
Yes, sir.
customer, this A limited entity is into the business of computer and laptop. They are selling computer and laptop. Ayush is in the business of furniture. Ayush is selling furniture, right?
Yes, sir.
So the fair value of the chair is 12,000 rupees. So Ayush has sold this chair to A Limited at 10,000 rupees. मतलब
हाँ,
2,000
so he'll
रुपये आयुष ने
recognize
डिस्काउंट
revenue
दिया
of
है,
10,000. हाँ,
राइट? सो
समझ गए
आयुष ने
सर.
2,000 का डिस्काउंट दिया है. बट अगर कंपनी ने आयुष को ज्यादा पे किया होता, देन इसका मतलब कंपनी ने डिस्काउंट दिया है, राइट? जो
Yes,
ज्यादा
sir.
वाला पोर्शन है, दैट एक्सेस पोर्शन हैज टू बी रिड्यूस्ड फ्रॉम द मनी कलेक्टेड फ्रॉम द कस्टमर. जो ट्रांजेक्शन प्राइस है उससे हम लेस करते हैं, राइट? So
Yes,
now
sir. Yes.
the second scenario. So the company has paid a consideration of 10,000, collected a consideration of 50,000, but the fair value of the chair is 7,000. So the market value of the chair is 7,000, but the company has paid to its customer 10,000. What to do here? So friends, the consideration payable to a customer is for distinct goods and services, which is chair. Hence, revenue needs to be recognized at gross value and cost needs to be recognized separately for a consideration payable to a customer. In this case, the consideration paid to a customer is more than the fair value of goods and services received. Hence, the amount beyond fair value needs to be adjusted from gross revenue. What is the accounting entry? Expense oblique asset chair account debit 7,000, right? Whatever has been paid 7,000. Bank account 40,000. Revenue 47,000, right? Revenue 47,000. Because the asset has to be recognized at fair value in this case, but fair value to the extent of money paid. So fair value to the extent of fair value, the money paid, whatever extra paid, that extra paid has to be reduced from the revenue. Okay, that extra paid has to be reduced from the revenue. Is this clear? Is this clear to all of you? Yes or no?
Yes, clear.
Very much clear or not clear?
Yes, sir. Very much clear, sir.
Anyone who has any doubt? Anyone who has any doubt?
Sir, in the given entry, can't we account for 3,000 separately also?
Can't we?
Sir, accounting for 3,000 discount as well here. In 47,000 plus 3,000, 50,000.
Okay, so let me put alternate accounting entry. Bank account debit. Bank account debit. How much is money collected by selling a laptop? 50,000. Right? To revenue. Credit. 50,000. Yes. Now, share account debit. It cannot be recorded more than the fair value because so 10,000 money has been paid, but the fair value of the chair is 7,000. So at what value we should record the chair?
At 7,000 only.
7,000. But what is the amount we have paid? What is the amount we have paid to bank? हमने पे कितना किया?
10,000.
10,000. Now chair account has to be debited by 7,000. So where the differential will go as per the standard?
For discount.
Means revenue you will debit ना?
Yeah, revenue.
Discount का मतलब आप revenue को debit करोगे ना? So we can pass these accounting entry. Okay, we can pass these accounting entry. Is this clear? Not clear?
Yes, sir.
Yeah. These are the alternative accounting entries. Alternate accounting entries. Okay. Alternate accounting entries. Is this clear or clear?
Clear, sir.
Clear. So
Clear,
to
sir.
cut a long story short, सिंपल आप इतना सोचो, आप अपने कस्टमर को पे कर रहे हो और कस्टमर ने आपको जो भी दिया आप उसकी वैल्यू से ज्यादा पे कर रहे हो, तो ज्यादा क्या है? व्हाट इज दैट ज्यादा? व्हाट इज दैट एक्सेस?
That is a cost to
So
the customer.
that is a discount which we have given from our revenue, right? If I'm paying my customer more
No.
than the goods and services I have received, it means I am paying a discount. मैं उसको cashback दे रहा हूं. I am giving a cashback to my customer. So net net मैं उसको क्या बोलता? Net net probably I would say that please pay me 47,000 rupees only and please take 7,000 rupees for your chair. Okay. Instead of doing that, what I have done that
40,000.
50,000 I have collected and 10,000 I have paid, right? So why? And let me tell you, these kind of detailed concepts were not there in Accounting Standard 9. Have you seen this kind of concept in Accounting Standard 9? Right? No. So why these kind of concepts have come? Let me tell you. These concepts have come because the entity started doing the manipulation. Okay. For example, if I have to record more revenue, what should I do? If I have to record more revenue, what I'll do? I'll so basically I will collect more money from my customer. And in case of consideration payable to a customer, I will collect more money. So I will tell Ayush that Ayush, instead of paying me 50,000, can you please give me 60,000 rupees? Ayush kahega, okay, sir. Right? And so for 50,000 rupees laptop, I have collected 60,000 rupees from Ayush. And what I did, of course, why he will pay me extra? And what I did, so I told Ayush that Ayush, can you please, when you sell me a chair, na, instead of the 10,000 rupees chair, I'll give you 20,000 rupees. Okay. So I will inflate my revenue by 60,000 rupees, assuming this concept was not there. Agar ye concept nahi hota, then what should I do? I will record a revenue of 60,000 rupees and I'll also record a cost of the chair of 20,000 rupees, right? So I will depreciate that asset by 20,000 rupees and I will recognize my high revenue at 60,000 rupees. The depreciation will be allocated over the years. Yes, the cost will come over the years in the P&L and the money collected revenue is 60,000 rupees. So friends, why these kind of provision came? That when you are paying to a customer for more than the goods and services value which you are receiving, that extra will be deducted from the revenue, just to curb these kind of manipulations, right? Okay. Otherwise, the entities started doing these kind of manipulation. They started inflating their revenue. They started inflating their asset and cost also, right? Is that clear or clear?
Clear, sir.
Very much clear.
Yes, sir.
Conceptually it is clear. ये आपको याद रहेगा. Will you able to remember this concept? If the consideration payable to a customer is for distinct goods and services, then you have to recognize revenue separately, cost separately. Okay. For
Yes, sir.
recognizing revenue and cost separately, if whatever you are paying to your customer, if it is equal to or less than the fair value of the goods received, then your payment to the customer is your expense or cost is equal to the payment to the customer. Okay. But if your payment to the customer is more than the goods and services received from the customer, then
Discount given.
it is just like a discount given on your sales. Okay. It means that extra, whatever extra you have paid to your customer, that extra will be deducted from the revenue. Okay. And with this example, this simple normal example of this A Limited and Ayush, I believe things are very much clear. when you look at these accounting entries, when you look at this example, when you look at this concept, in less than 5 minutes, it will be clear to all of you. Yes or not? Yeah.
Yes, sir.
Friends, are you enjoying the session?
Very
Yes.
much enjoying, sir.
Very much.
Very much? Okay. An entity, now let's do a illustration number 52 from ICAI study material. Okay. An entity that manufactures consumer goods enters into a 1-year contract to sell goods to a customer. That is a large global chain of retail stores. An entity that manufactures consumer goods enters into a 1-year contract to sell goods to a customer, which is a large global chain of retail stores. The customer commits to buy at least 15 crore of products during the year. What is the commitment? 15 crore rupees commitment. The contract also requires the entity to make a non-refundable payment of rupees 1.5 crore to the customer at the inception of the contract. The contract also requires the entity to make a non-refundable payment of 1.5 crore to the customer at the inception of the contract. So what is the sales value of this entity? What is the sales value?
15 crore.
What is the consideration payable to the customer?
1.5 crore.
So this entity is collecting 15 crore and this entity is paying 1.5 crore. Okay. Now we need to see whether gross revenue and cost or net revenue. Yes. So the next line will make it clear. The 1.5 crore payment will compensate the customer for the changes it needs to make to its shelving to accommodate the entity's products. So friends, this entity wants to sell its product to this global chain of retail stores. And their shampoo bottle, for example, this entity is in the business of manufacturing shampoos. And their shampoo bottles are very big. Their shampoo bottles are large bottles, right? And these are not getting fitted into the shelves, right? So the shelves are like of this size, 1 foot shelves, and the shampoo bottles are like, right? So these are the shampoo bottles, okay? These are of this shape, shampoo bottles, okay? So friends, this is the shampoo bottles, okay? So this entity is compensating, this entity is paying to this entity to what? To customize their shelves so that their product will get fitted. That product will get fitted into the shelves, right? So friends, in this case, whether this entity is getting any goods and services for paying 1.5 crore to the customer?
No.
No.
Answer is no. This
No,
entity is
sir.
not getting any control of any goods and services. So this customer is saying to this entity, listen, I cannot buy your product. Why? Your product, the size of the product is very bulky, very lengthy, and I don't have a place to keep these items in my shelves. And this entity is telling you, this customer, that not to worry, how much cost it will incur if you modify or customize these shelves. So customer is saying, why should I incur a cost? Then this entity is saying, I am asking, I'm not saying you to pay the cost. So this customer told it will take around 1.5 crore. So this entity told, okay, no, not to worry. I am paying you non-refundable amount of 1.5 crore. Please customize yourselves. Okay. So this is a consideration payable to a customer, and this consideration is not for the distinct goods and services. So what should we do? We should
Net off.
net it from
Reduce.
revenue.
Net
Right?
off.
Net off. The entity is collecting the consideration of 15 crore and paying a consideration of 1.5 crores. In this case, the entity is not getting any control of any goods and services in lieu of paying a consideration of 1.5 crores. Okay. Hence, the consideration payable should be treated as a reduction in revenue in accordance with Ind AS 115. So consideration received is 15 crore, consideration paid is 1.5 crore. So what is the net revenue? Net revenue is 13.5 crore. Your net revenue is 13.5 crore. What is the accounting entry? Bank account debit 15 crore. To bank account credit 1.5 crore. To revenue 13.5 crore. Okay. Alternatively, bank account debit to revenue 13.5 crore. Okay.
Sir, in this case, the entities obtain the control, then what will be the entry, sir?
If the entity
Obtain the control, does not obtain the control, okay, we reduce, net it off. Then we will book the revenue separately, 15 crore. Cost we will book separately, 1.5 crore.
So let's say this entity will say that you have to customize the cells, okay? And those cells, of course, you will not customize your entire store. You will customize some cells where you will keep our product also, okay? And entity is saying that, those cells will belong to us for the next 5 years, right? So we will control those cells and the product will be kept in those cells as per our desire, as per our whims and fancies. In that case it will be treated as a what?
Distinct goods.
डिस्टिंक्ट गुड्स. ठीक है, मतलब वहां पर आपने स्पेस अक्वायर कर लिया, कंट्रोल ले लिया स्पेस पे. बट इवन दो इफ यू हैव डन द कस्टमाइजेशन, but it is up to the wish of the entity that how the entity operate, what else the entity will keep. So you don't have any control. In that case, it will be netted off. Okay. If there is any control, then it has to be shown as an expense, as a cost. Okay. That 1.5 CR, if the control is for a 5 year of contractual period, every year you have to record a cost of 30 lakh rupees. Okay. And the revenue has to be recorded in a gross amount of 15 crore rupees. Is this clear?
Yes, sir. Clear.
Very much clear?
Yes, sir.
Okay, very good. So friends, any question, any doubt up to this part? Any doubt? Any question? Please let me know if you have any question, any doubt is there. No doubt का मतलब या तो सब समझ में आ गया या कुछ नहीं समझ में आया.
Clear, sir. Clear.
Yeah.
सर एक क्वेरी है.
Yes, please.
अगर हम कोई जैसे मान लो फर्नीचर बना रहे कस्टमर के लिए और वो फर्नीचर बनाने के लिए क्लॉथ की जो सप्लाई है वो कस्टमर दे रहा है, तो उस केस में हम नेट ऑफ इनकम बुक करेंगे या फिर क्लॉथ का जो सेपरेटली एक्सपेंस बुक करेंगे?
See, two things are there. First of all, you need to see, is it a transaction with a customer? For example, I am an entity, okay, and I am in the business of manufacturing furniture, okay. So, and I am manufacturing a chair for my customer. The cost of the chair is 10,000 rupees. And I told to my customer, see, the cost of this chair is 10,000 rupees. I need 10,000 rupees to manufacture this chair. The customer will tell me that what is the major cost. Let's say I'll tell him the major cost is the cloth. So customer will tell me, okay, I will give you cloth. Now you tell me what is the price. So what's your name? Neha, right?
Mamta.
Mamta, yes, Mamta. So Mamta, this is just like with material contract and without material contract, right? At times we give the contract to our contractors, like interior decorator, interior designer, okay, or a contractor. We will say that you have to construct my house. I'll give you all the material. You have to provide the labor services. I will give all my material, right? At times we give with material concept. At times we give without material concept. So as an entity, in your example, let's say the cost of the chair was 10,000 rupees with material if I will do all the things. But if customer is giving me cloth and I am charging only 6,000 rupees, in that case, for me, the revenue is 6,000 rupees. Okay. But if the customer is not giving me cloth and I am giving everything and charging 10,000 rupees, 10,000 is my revenue. And of course, cost, what is my cost? My cost is, if I am putting cloth, I am putting wood, I am putting Fevicol and other aspect. So that will become my cost of goods sold. My revenue will be 10,000. So in this case, my revenue will be 6,000 rupees. Why? Because this cloth has been supplied by the customer itself. I have not purchased that. Right? Clear,
Right, sir.
Mamta?
Yes, sir.
Absolutely clear?
Yes, sir.
Without any doubt?
Yes, sir.
Okay, very good. Very good.
Sir, in the example number 52, which we have taken, there is different answer in module, sir.
What answer in the module is given? So let me go to the module. What it says that? So let's read the answer. It is a 1-year contract. Okay. The entity consider the requirement in paragraph number. Paragraph number you have to write or you don't have to write?
Don't write, sir. Don't remember, don't write.
Don't write.
Remembering the standard number itself is difficult.
Yes, yes. So see, in CA final, remembering section number in income tax is more than enough. Don't remember paragraph number. Right. So, what's your name? So who has asked this query? Ankit or Sanjay? Sorry, I'm not able to hear the name. Anyways, so let's read the answer which is given in the study material. Okay. The entity consider the requirement in Ind AS 115 and concludes that the payment to the customer is not in exchange of distinct goods and services that transfer to the entity. Is this aligned with the answer which I have given? It is not for the distinct goods and services. If it is not for the distinct goods and services, that is why we have netted off from the revenue. Okay. If it would have been for the distinct goods and services, then revenue has to be recognized on a gross basis and cost needs to be recognized. Okay. This is because the entity does not obtain control of any rights to the customer's sales. Consequently, the entity determines that in accordance with para 70, don't remember, the 1.5 crore payment is a reduction of the transaction price. What it says that it will 1.5 will be reduced from the 15 crore. 13.5 crore will be the transaction price. यही बताया मैंने आपको?
Yes, sir.
Yes or no?
Yes, sir.
Yes. So now what it says that the entity applies the requirement in paragraph 72, you don't need to remember, and concludes that the consideration payable is accounted for as a reduction in the transaction price when the entity recognizes revenue for the transfer of goods. Now the question is, this entity is paying upfront 1.5 crore, okay? And this entity will sell the goods over the 1-year period. Right, over the 1-year period. So what this entity should do? पहले दिन ही नेगेटिव रेवेन्यू कर दें? ममता क्या करना चाहिए? सो पहले दिन कंसिडरेशन पे कर दिया कस्टमर को सेल्फ को मॉडिफाई करने के लिए. अब कस्टमर गुड्स परचेज करेगा इस एंटिटी से. अब एंटिटी जब सेल करेगी तो धीरे धीरे पैसा एडजस्ट होगा. यस या So can the entity recognize a negative revenue when the entity has paid money to the customer on day 1? Answer should be no. So when the entity will pay to the customer on the day 1, the accounting entry is customer account debit to bank account. It will be standing in the name of the customer. Why? What happens if the company has paid 1.5 crore but subsequently the customer has not done any modification? Then this entity has to recover the money back from the customer because the intent is to sell the goods. That is why this entity is ready to invest 1.5 crore. Correct?
Yes, sir.
है ना? So now this entity has modified also, and now this entity, customer has modified also, and the entity has started selling. So what this answer is saying, consequently, as the entity transfer goods to the customer, the entity reduces the transaction price for each goods by 10%, that is 1.5 divided by 15. Therefore, in the first month in which the entity transfer goods to the customer, the entity recognizes revenue of 1.125 crore, right? 1.25 crore invoiced amount less 0.125 crore of consideration payable to a customer. So what this is saying, let me tell you what this second paragraph is saying. This second paragraph is saying total commitment of 1 year. What is the total commitment of 1 year? कितनी commitment है दोस्तों?
13.15
crores. Total commitment of sales 15 crore है ना?
Yes, sir.
April, May, June, ये अगस्त के बाद क्यों नहीं ले रहा? सितंबर, अक्टूबर, नवंबर, जून, जुलाई, अगस्त, सितंबर, अक्टूबर, जुलाई, अगस्त, सितंबर, अक्टूबर, नवंबर, दिसंबर, जनवरी, February, March. If 15 crore is the commitment, what is the sales? What is the sales value? What is the revenue every month? Assuming
15
proportionate.
divided by 12.
15
Yeah,
divided by
1.25 crore.
Yes. Yeah. So what is this consideration payable of to a customer is just like a cashback, just like a discount. Okay. So it will be treated like a discount. Net to receipt कितना है? Net receipt is 13.5 ना. So what is the discount value? Minus what is the discount? 1.5 CR divided by
1.5.
12. 0.5. This is what this study module is saying. So the answer is not different. The answer is further extended, right? Ki monthly, this has to be allocated on a monthly basis. Monthly basis pe you will recognize this revenue. Okay.
Okay.
Net revenue. This is how you should recognize your net revenue. Is that clear?
Yes, sir. More clear.
Okay. मैं भी घबरा गया था कि आंसर डिफरेंट कैसे हो गया.
सर बट क्वेश्चन बोल रहा था एट द इंसेप्शन ऑफ कॉन्ट्रैक्ट पर अपन को 1.5 करोड़ का पेमेंट करना है कस्टमर को.
यस. तभी ये क्लैरिटी क्यों दी? सो व्हाई दिस स्टडी मटेरियल हैज गिवन यू क्लैरिटी. Study material is saying that when you are paying it upfront, so how this accounting entry will happen, let me tell you again. So when upfront, so for example, on day one, when money paid to, so let me give you the entire accounting entries. Okay, so net revenue, so इसको शुरू से इसको मैं आपको accounting entry सारी फिर से बताता हूँ. ठीक है, यहां तक एवरीथिंग इज क्लियर ना? सो यू आर क्लियर अबाउट द कॉन्सेप्ट ना? Concept is clear. Okay, so now let me give you accounting entry in detail. So at the time of upfront payment to the customer, okay, what is the upfront payment to the customer?
Sir,
1.5 crore.
1.5 crore, which is day one. So customer account debit. You can write dater, customer, Ram, Ghanshyam, Radheshyam, Mohan Shyam, whatever. ठीक है ना? So उसमें नंबर नहीं कटते. Right. One of the student was telling me, sir, can I write sundry debtors? The another one was asking, sir, can I write debtors? The third one was asking, sir, can I write advance to customer? Whatever you want to write, please write. Okay, but write. Okay, so customer account debit to bank account. So never institute cut the marks on the name on at least on the names. Okay. credit. What is the amount? Can you guys help me quickly? 1.5
1.5 crore.
1.5 crore.
1.5 crores. Okay. Now, at the end of first month, okay, at the end of first month, what is the entry at the end of first month? Customer account debit again, and this entity has sold goods. This entity has sold goods to the customer. Customer account debit to what? Customer account debit to revenue.
To revenue.
Bank account debit.
To revenue. And how much is the revenue? How much is the sales?
15 divided by 12.
Sales is 15 divided by 12, 1.25 at the end of first month, right? Now, second entry. What is my second? Now, of course, my revenue is not 1.25 and I am not required to, receive this 1.25. So, revenue account debit. So, I will debit my revenue by what amount? कितने से?
0.125. 1.5 divided by 12.
I will adjust 0.125. 1.5 crore divided by 12. 0.125. And what I will credit? What I will credit now? I will credit my customer because I don't have to receive this 1.5 crore back to my customer because customer has already done the modification in the sales, right? So to customer, right? So this entry repeats. This entry repeats at the end of first month and repeats
Until end
Till
of
last
12th month.
of every month, right?
Till for one.
Every month. And what is the money which I have received from the customer? So I need to receive, I have already paid to the customer 1.5 crore and I have to receive the entire 15 crore. मैंने 15 लेना है और 1.5 में दे चुका हूं. Okay. So third entry, bank account debit. So what is my bank account debit? Tell me. मेरा बैंक कितने से डेबिट होगा to customer?
1.125.
Or
1.25 minus 0.125.
Again think about. Again think.
13.5, sir, at the end of year.
Think about again, my dear friends.
I think
bank
first month
account
they
will
would
be
be giving
debited.
complete 1.5.
My bank account will be debited by complete 1.25.
Yes, sir.
1.5 I already paid. I will collect entire 15. The customer will pay me complete 15. Okay. Why? Because I have already paid him 1.5. I was collecting 50,000 rupees for laptop and I was paying 10,000 rupees for chair. Right? So if I have paid 1.5 already, how much I will receive?
You will receive
15 receive करूंगा ना. अगर
Yes, sir.
question में लिखा होता, if question will tell you that this entity has allowed the modification to the tune of 1.5 crore and this has to be adjusted from the collection in future, then this entry would not have been there, na?
Yes.
Then this entry would not have been there, na? By passing this entry, this company has credited the bank account. The cash has gone out. The cash has reached to the customer. Without any sales, the consideration has already been paid to the customer. So now the time has come when I have to collect the consideration, full consideration. And whatever I have paid, since the company is not getting any distinct goods and services, that is why revenue is getting adjusted. Revenue is getting adjusted, right? But the bank should not be adjusted because the money has been paid. Now money has to be collected, complete. Okay? Is that clear?
Yes, sir. Now clear.
Now clear? Very good. मैं आपको अब पूरे 12 महीने का कस्टमर अकाउंट, बैंक अकाउंट और रेवेन्यू अकाउंट बना के दिखाऊं या नहीं छोड़ दूं, या वो भी दिखाऊं?
Yes, sir. अब समझ गए.
समझ गए? So नेहा, ममता, अनुश्री, is that clear to everyone?
सर इंस्टीट्यूट के आंसर में हम आपकी फर्स्ट वाली जो एंट्री वो शो करेंगे ना?
Yes, you can just so basically in the institute answer, instead of showing the entry, if you want to write an entry, you can write, okay? But in institute answer, you can show this entry and you can also show this entry as well, okay? If you want to show the entry. Alternatively, instead of showing the entry, you can say that the company has to record the company has to record the the company has to debit customer by 1.5 cr, and the company has to credit cash or bank by 1.5 cr on the day one, right? And in every month, the company should allocate this 1.5 crore of consideration payable to a customer as a discount in every month, in every month sales. For example, in the first month, assuming the sales will be 1.25 crore, right? So the sales or revenue has to be recognized from 1.25 minus 0.125 crore. Okay, from this the revenue has to be recognized. Okay, and the money has to be collected from the customer, which is entire 1.25 crore. So you can either write as a narrative, or you can write the accounting entry also. Okay, so in the institute you can show this and as well as this also. आप ये भी दिखा सकते हो. Okay. और अगर आप ये नहीं दिखाओगे, सिंपल ये भी बोल दोगे कि yes, in the full year the net revenue has to be recognized, which is 13.5 cr. This 1.5 cr has to be adjusted from 15 cr because the entity is not collecting the distinct goods and services. Okay, even that is also okay. That is also okay. Clear? So it is up to you. Number will not be deducted. Right? Okay, Mamta?
Yes, sir.
Okay, fine. So friends, we have completed, we have covered the third step, which is determine the transaction price. Now it's a time of a break, and it's 8:28 now. We will have a 10 minutes break. We will start at 8:38. Okay, and then we will start the fourth step. What was the fourth step? What is the fourth step? The fourth
Allocation
step
of transaction price.
now we will allocate the transaction price. Okay, so thank you so much. We'll meet after 10 minutes with the new step. Thank you so much. Break start, Ashok ji. Yes, the next step is allocation of transaction price to various performance obligation. So friends, first step we identified that yes, it is a contract with the customer. Then we also determined, yes, in the contract there are 3 performance obligation, there are 4 performance obligation, right? And we also understood that what is the transaction price, right? Because the revenue has to be measured at transaction price. And what is the transaction price? We have also understood. And we have covered lot many concepts in this standard. Can anyone tell me what are the concepts we have covered in this standard up to this time, up to this level? Can anyone help me? Only name of the concept, not in detail. So Mamta, will you be able to explain what we have covered in this standard so far? Okay, should I explain? What I have covered in this standard so far, I started the journey with the definition of revenue, contract, and customer. Okay. And I told you that how revenue is different from income. Then I have covered the scope paragraph of this standard. Then I have covered the first step, identification of contract with the customer. And in the first step, I have told you one of the important concept that revenue has to be recognized only to the extent the probability of collection of consideration is there, right? When there is a certainty of collection of consideration is there, then only we need to recognize revenue only to that extent. That was one of the important concept. Then we also talked about the contracted term, the contracted units. We did some examples also. Then we have covered the concept of combining the contract and concept of separate contract. Yes. Then we discussed the next step of determination of performance obligation. We understood the concept of distinct goods and services at a goods and services level and at a contract level. And then we discussed that what is the performance obligation in case there is a right of return of the goods, right? We also discussed the concept of principal versus agent, concept of consignment. We also discussed the concept of option of giving a material right to discount, option of having a material right of discount. Okay. Then we also understood the concept of warranties, assurance type warranty and service type warranty. We understood the concept of warranty as well, right? So friends, then we have entered into the third step, which is the determination of transaction price. In determination of transaction price, we understood the meaning of transaction price and we understood 4 concepts in detail. Number 1, variable consideration, right? Like bonus, penalty, incentive, volume discount. Okay. Variable consideration. Number 2, significant financing component. Number 3, non-cash consideration. Number 4, when the entity is paying money to the customer, means consideration payable to a customer. These 4 concepts we have covered in step number 3 as well. Okay. So friends, just to summarize the standard, just to control the standard, what you guys should do, you guys should prepare your important notes. And in the important notes, write step number 1. Identify the contract with the customer. What is important in this step number 1? So in this step number 1, what is important? Meaning of contract is important. Contract term, contract unit. Then what is important? One of the step which talks about that revenue has to be recognized to the extent there is a certainty of collection. Okay, adjust. That is important. Then what is important? Combination of a contract, separation of a separate contract. That is important. In performance obligation, what is important? Right? In performance obligation, what is important? In performance obligation, it is important that meaning of distinct goods and services. A performance obligation is a distinct goods and services, and you need to compute, you need to look at distinct goods and services from the goods and services level and contract level and both the levels. Okay. Then the concept of principal versus agent, concept of right of return, concept of consignment, We did one question today also. Concept of granting or giving, concept of option of granting material right of discount, right? And concept of warranties as well. These 5 concepts we have covered, right? Then third concept, third step, transaction price, meaning of transaction price, variable consideration, significant financing component, non-cash consideration, consideration payable to customer. These 5 concepts are important in the third step. This is how you can control your standard. Okay, tick, 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 tick. This I have covered, this I have covered, this I have covered, this I have covered, right? So friends, in this Excel file, for each and every important concept, I have given the detail. I have jot down the understanding with the help of layman language examples. For example, right? For example, you can see when I started this standard, I have given the overview. Then I have one by one, I have made you guys clear about the definitions. Okay. Then I have given the helicopter view with a layman example along with the accounting entries. So this is the entire summary. Then friends, I have covered the concept of contract modification with the help of detailed examples. Okay. And with the help of accounting entries as well. Okay. Then on the next day, what I've covered, I have also covered the meaning of performance obligation, the concept along with the various examples and the accounting entry. So all the concepts are there in the Excel file. All the important concepts are in the Excel file, right? You can see that all the concepts are there in the Excel file. You can see the today's concept as well, determination of transaction price. All the concepts along with the examples are there in the Excel file. Okay. Then friends, today we are going to discuss allocation transaction price. Thank you, Geet. Thank you for the feedback. Geet is saying very lengthy and detailed. This standard is. Thank you for the quick revision. It is very important. And believe me, in my 6th lecture, I will do the revision 6 times. So that whenever you listen these video or even you are attending these classes, so a lot of things are clear to you. A lot of things you will not be able to forget. Okay. That is why it is important. I totally agree. This is a very lengthy standard, and that is why I requested one more session of 3 hours on Sunday. Okay. Yeah. Shall I proceed? Allocation of transaction price to various performance obligation. Now the time has come. You know the transaction price. Now you need to allocate the transaction price. Okay. What is the transaction price? You all understood. Allocation, you know. So we need to allocate the transaction price on the basis of what? How to allocate the transaction price? कैसे allocate करें transaction price?
Based
Based
on
on
the
SSP,
standard selling price.
On the basis of standalone selling price, SSP, on the basis of fair value, on the basis of market value of those performance obligation. So friends, the transaction price for a bundle of goods and services, you remember helicopter view, air condition, stabilizer, installation service, 2 maintenance service, the package was given for 50,000 rupees, right? So the transaction price for the bundle of goods and services are rupees 1 lakh. These are distinct goods and services and separately identifiable in the contract and are separate performance obligation. The standalone selling price is given below: 50,000, 40,000, 30,000, 20,000. 1,40,000 is the aggregate of the standalone selling price of these performance obligation. Determine the transaction price for each performance obligation. Determine the transaction price for each performance obligation. Right. Determine the transaction price for each performance obligation. Tell me how to allocate the transaction price for each performance obligation. How to do this? How to
On
do this?
proportionate basis.
On proportionate basis. So we will allocate 1 lakh in the ratio of 50 is to 40 is to 30 is to 20. Correct?
Yes, sir.
Proportionately. Now, just logically, let's think logically. This customer has paid 1 lakh rupees, right? And what is the total value of the goods and services this customer has received? The total value? 1,40,000.
Yes, sir.
the total value of the goods and services this customer has received is 1,40,000. The total value of the goods and services this entity has sold is 1,40,000. But how much this entity has received? 1 lakh
1
rupees.
lakh.
So this entity has received 40,000 rupees less by selling this package. So what does it mean? This entity has given
Discount.
a discount.
50,000 discount.
40,000 discount. Very good. 40,000 discount. So for this package on the day one, so this transaction price has to be determined on the date of inception, right? On the day one, when you are entering into a contract. I have entered into a contract with my customer to sell him a package. Okay. And I have 4 performance obligation in my package. The total value is 140, but I am collecting 1 lakh. So the discount of 40,000 which I am giving it to my customer, whether it belongs to my first performance obligation or second or third or fourth only, or it is for the entire package. It is for the entire package.
Yes.
Right? This performance obligation is for the all four. This performance obligation is for the all 4. Okay. So for example, when I complete my first performance obligation, I will recognize the revenue. When I complete my second performance obligation, then only I recognize my revenue. So why this allocation becomes important? This allocation is nothing. This allocation is allocating a discount to those performance obligations. Yes or no? So that I can recognize my revenue accordingly. Discount ही तो है. उस 40,000 को discount को we have allocated into the 4 performance obligation, that 40,000 discount. Yes. So transaction price of rupees 1 lakh in accordance with Ind AS 115 will be allocated in the ratio of standalone selling price of the performance obligation on the performance obligation. Standalone selling price. Standalone selling price, okay, of the performance obligation. So how it is going to be allocated? कैसे होगा इसका allocation? कैसे करें इसका allocation? 50,000 multiply by 1 lakh divide by 1 lakh 40. 40,000 multiply by 1 lakh, right? Divide by 1 lakh 40,000. 30,000 multiply by 1 lakh divide by 1 lakh 40,000. 20,000 multiply by 1 lakh divide by 1 lakh 40,000. This is the total 1 lakh. Allocation of transaction price. Okay. And if I talk about the discount, in every performance obligation, how much discount I am recognizing? This is the discount I am recognizing, correct?
Yes, sir.
Yeah. So this is to determine the transaction price of the performance obligations, right? This is how to allocate the performance obligation. Now the question is how to determine the standalone selling price of the performance obligation, right? So the first one was very simple. If you have the standalone selling price, you have to apply the mathematics which my daughter is learning in class 7th, right? Unitary method, proportionate, ratio, proportion, right? So you need to apply the mathematics of class 7. Okay. Once you know the standalone selling price of all the performance obligation, you understood it is a contract. You know that there are 4 performance obligation, right? Distinct goods and services at a goods and services level and at a contract level. And you know the transaction price, total transaction price. Now you need to allocate the transaction price you have allocated. But what happens if you don't know? If you don't know the standalone selling price of any performance obligation, then how to compute the standalone selling price of the performance obligation, right? So friends, how to determine the standalone selling price of the performance obligation? Standalone selling price. What is a standalone selling price? क्या होता है standalone selling price? What is the standalone selling price?
Individual price of each performance obligation.
Individual fair value, market value, right? Individual fair value, market value of each performance obligation. This is your standalone selling price, correct?
Yes, sir.
So standalone selling price is the observable price of the performance obligation. It is the fair value of that performance obligation, okay? But if standalone selling price of the performance obligation is not identifiable, not available, not measurable, not available, not identifiable, or not available, in that case we need to estimate the standalone selling price. What we should do? We need to estimate the standalone selling price. And how to estimate the standalone selling price? So friends, there are three approaches to estimate the standalone selling price. And the first approach is AMMA approach. What is the approach? AMMA. AMMA. And what is the full form of AMMA?
Amma approach.
Adjusted market
Adjusted market assessment approach.
Adjusted market assessment approach. AMMA approach. Adjusted market assessment approach. What is the second approach? It is cost plus margin approach. CPM approach. It is CPM approach. Okay. Cost plus margin approach. CPM approach. CPM approach. Okay. Cost plus margin approach. CPM approach. CPM. Or I should write this as a CPM. And the third approach is residual approach, which is known as RA approach. Okay. So these are the three approaches given in the standard by which you can measure, you can compute your standalone selling price, right? You can compute your standalone selling price. What is AMMA approach? What is AMMA approach? Let me tell you. So adjusted market assessment approach is an approach by which you compute the standalone selling price of a performance obligation. Let's say you are not selling some goods and services as an individual goods and services. Okay. You are always selling some goods along with installation service. You are always selling some goods along with the installation service. Okay. Let's say you are into the business of electronics. Okay. And your business model is to sell goods along with the installation and maintenance service. Always. But customer can get the installation separately also. Customer can get the maintenance from other companies also. Okay. So friends, but this company which is recognizing revenue, this company is not estimating this company is not selling installation and maintenance separately. This is always selling with a product, always as a package, right? But the competitors are selling, right? This company is not selling, but the competitors are selling the installation, providing the installation service separately also. You have not purchased any product from that company, but when you go to that company and ask for an installation, they will provide you the installation. But of course, they will charge. You have not purchased a product. You have not got the installation done. But what you are doing? You are asking for a maintenance service. So since you are asking for a maintenance service, in that case, so it will also provide you maintenance service. So adjusted market assessment approach means if your competitor are selling that goods and services, you can from that market, you can take the price and you can adjust the price. From that market, you can take the price and you can adjust the price for computing the estimated standalone selling price. Example. Let's understand with the help of an example. The entity is selling a package of goods and services, air condition, stabilizer, installation and maintenance service, and determine these 4 performance obligations separately. The entity is not selling stabilizer separately. Okay. The competitors are selling stabilizer at rupees 5,000. The entity estimate that the purchase cost of stabilizer may be more than 10% in comparison to its competitor. right? What is the standalone selling price? What is the standalone selling price of the stabilizer to the entity?
$5,000.
Adjusted market assessment approach. Okay. So I am not
5,500.
I'm not selling that goods separately. I don't know the price, but I know my competitors are selling that goods separately. They are picking in bulk, right? And I know that my purchase cost is 10% more than the purchase cost of my competitor. So don't you think in that case, my standalone selling price adjusted market assessment approach for me, the standalone selling price of the stabilizer would be also increased by 10%, means it would have been increased by 10%, which is 5,000 ka 10%, which is 5,500. Yeah. So yes, in this case, the entity need to estimate the standalone selling price using the adjusted market assessment approach. So whatever market assessment you have done, you are doing some adjustment in that. And hence the standalone selling price may be 5,000 plus 10% of 5,000, which is 5,500. Your standalone selling price will be 5,500. For example, you know makhana. Have you heard about makhana? That white dry fruit? This makhana
It's
is,
about
yes,
100 per kg, sir.
what is the price?
It's around 1200 per kg.
Oh, very good. So I think you are meeting makhana on a daily basis. So makhana is good for health and mind. Yes. So
Yes, sir.
makhana is produced or manufactured in it. So it's a natural product, right? It's a dry fruit. It's a natural product. So makhana is getting produced in Bihar. So Bihar is the largest producer of makhana. So the price of makhana in Bihar, you will get the makhana at 1100 rupees kg or 1200 rupees kg. But in Delhi, you will get this makhana at 1500 rupees kg or 1600 rupees kg, right?
Sir, makhana is walnuts, sir, or something else?
So it's not walnut. So I'm not able to remember the English of the makhana, but it's a dry fruit. It's a white dry fruit. Okay.
It's called
So
foxnut.
foxnut, yes. It's foxnut, yes. Yes. Yeah.
Okay.
So friends, now tell me, let's say makhana, that foxnut is a separate performance obligation. And in Bihar, since there is a largest production in Bihar, the price is 1200 rupees per kg. But in Delhi, it is 1600 rupees per kg. Why? Because when this came to Delhi, there is a price of transportation also, right? So your fair value is getting higher due to the transportation also. Okay. So friends, if I don't know the price in Delhi and I know this makhana is only getting traded in Bihar, and in Bihar the price is 1200 rupees. So should I take 1200 rupees as a price of this performance obligation? Answer
No,
is no.
sir.
So taking the price of that market, I will do some adjustment here. And what is the adjustment I'll do? And just think about one thing. You are a trader. You are a supplier or a trader, and you are sitting in, let's say Saminathan is sitting in Chennai and he is purchasing goods from Delhi. So Saminathan, when you sell those goods, the price which you will determine, the price which you will fix, whether that price will include the transportation cost or not. Taking the goods from Delhi to Chennai, whether you will consider that cost also or not.
Yes, sir.
You will consider that cost also. Yes, you will consider that cost also, right? So the point is, what is adjusted market assessment approach? So if you don't know if your standalone selling price of performance obligation is not identifiable, not measurable, in that case, you have to compute that. Okay. So how to compute that? How to estimate that? There are three approaches: adjusted market assessment approach, cost plus margin approach, residual approach. Going by the adjusted market assessment approach, so whatever is the price you are getting from a market, you have to do the adjustment as per your entity, right? And after that adjustment, you will be able to estimate the standalone selling price for that what for that performance obligation. Is this clear to everyone?
Yes, sir.
So there is no explanation beyond this explanation even in the study material. Okay. Yes.
Yes, sir. Agreed.
Cost plus margin approach. Now you have to determine the standalone selling price of the performance obligation. You don't have that. But you are a company which has a policy that I will sell the goods minimum at 20% margin. So what is my margin threshold? My margin threshold is 20%. My margin threshold is 20%. 20%. And what it says that I will earn 20% margin. I will earn 20% margin. So friends, I don't know the standalone selling price, but I know the cost because of course I have purchased, I know the cost. So I know the cost. If I know the cost and I know the margin percentage, can I derive my standalone selling price? क्या मैं अपना standalone selling price निकाल सकता हूं?
Yes, sir.
Yes or no?
Yes, sir.
Yes. Okay. Yeah. So friends, standalone selling price I can also determine by cost plus margin approach. So friends, now let's discuss this cost plus margin approach with the help of an example. Okay. So friends, just allow me a minute. Okay. 1 minute. Yes. AG Limited. Who is AG Limited? Alok Garg Limited. Alok Garg Limited sold a software and also provide installation services to the customers. The entity does not provide installation service separately and always used to sell software and installation together. Both of these are distinct goods and service and hence two separate performance obligation, right? The entity has engaged a software engineer. The entity has engaged a software engineer who helps entity in installation of software on the customer premises. Have you ever got the installation done for any product in your house? Any real life example?
Yes, sir.
Which one?
Yes, sir.
Which product?
Sir, for AC, for TV,
AC, air condition, right? So
for
you know,
TV.
yeah, air condition or TV. Let's say, take an example of air condition. So which company air condition you have purchased? Which company AC?
Sir, higher company, sir.
Higher company.
Panasonic, sir.
Which one?
Panasonic.
Panasonic. Okay. So he purchased an air conditioner of Panasonic, right? So whether owner of Panasonic came for the installation? Who came
No,
for
sir.
the installation? The mechanic. The mechanic came for the installation, right? So when people will come to your house for installation, just have some dialogue. These mechanic, right? In majority of the cases, these are the outsource agencies. So Panasonic, O General, LG, Samsung, right? Havels. So these companies outsource this installation service to an agency, and the people from agency will come for the installation, right? They will represent that I am a mechanic from Panasonic, but they are on the rolls of some other companies, other agencies. So this company has sold goods with installation. And for every installation done, for every service done, they are paying a fixed amount to these people, right? So so Panasonic is not giving a salary. So Panasonic has a contract. Listen, I will pay you 250 rupees per installation, right? In a month, if you will do 1,000 installation, you will get 2,50,000 rupees, right? So they are paying per unit of installation, per unit of service to these guys. Okay. So this company is also selling software, and this company is is selling software along with installation. These are two separate performance obligations. And this entity has engaged a mechanic who helps entity in installation of software on the customer premises. Engineer charges 5,000 rupees on every installation performed. Right. Engineer charges 5,000 rupees on every installation performed. Normally, the entity earns 20% margin on the goods and services delivered to the customer. So determine the standalone selling price of the installation service. Tell me, what is the standalone selling price of the installation service?
5,000 plus 20% and 5,000.
Any different answer? When you know the cost and when you know your margin, which approach is a better approach?
Cost plus margin approach.
Or CPMA? Cost plus margin. In this case, cost plus margin approach is appropriate as the entity knows the cost of the performance obligation and the margin in the business it expects. Hence, the standalone selling price is 5,000 plus 20% of 5,000, which is 6,000 rupees. Residual approach. Friends, Amma approach and CPMA approach, both are clear? Amma and CPMA? Both
Yes,
are clear?
sir.
Yes, sir, clear.
Residual approach. Now come to the residual approach. Okay. What is residual approach? Friends, residual, the meaning of residual you understood?
Balancing
Residual का
figure.
मतलब? Have you heard this word residual in any accounting standard?
In depreciation concepts, I think.
Yes, very good, very good. Residual value, right? In depreciation concept, there is a concept of residual value. You are computing depreciation by cost minus residual value divided by useful life. Okay. I must say, so I'm teaching since last 10 years. Okay. And I must say, and probably, I'm teaching in this LVC, live virtual lectures of Board of Studies. So it is my 5th or 6th year. So since last 5-6 years, I'm teaching in LVC. Right? Believe me, this is one of the best batch of FR which I have seen ever. I must say. Right? I am talking about the batch.
Thank you, sir. It's our blessing, sir.
It's our.
So guys, I must say that you guys will score more than 75 marks in FR. I can guarantee you. You will score that, provided you have to do hard efforts. You have to solve all the questions from ICAI study material and RTPs. All the questions. You have to go through with the concept which I have given you, which I am explaining you on the Excel file. While PPT is there, in PPT the words are more technical, standard driven, right? But in Excel file, all these things are explained in a layman language. Okay, right? So friends, let's discuss the residual approach. What is the residual approach? The residual approach, as the name suggests, is bacha kucha. Bacha kucha is known as residual. Okay. Yes, the entity is selling a package of 3 goods. The entity is selling a package of 3 goods, A, B, and C for rupees 50,000. The entity used to sell B and C separately also, but always sold A with B and C in a package. So the entity has 3 combinations. Combination number 1, A, B, C put together. Combination number 2, the entity used to sell B separately, C separately, and B and C collectively also. Okay. The standalone selling price of B and C is 20,000 and 25,000 rupees respectively. Determine the standalone selling price of A in this transaction. Okay. The standalone selling price of B and C is 20 and 25,000 rupees respectively. Determine the standalone selling price of A in this transaction. So friends, the price of the package is 50,000. Oh, let me complete first. The price of the package is 50,000, and since this entity is selling B and C separately as well, so we know the price of B and C. So what will be the price of C? Sorry, what is the price of A? A का price क्या होगा?
Sir,
In this
5,000.
case,
जो बचा है
B,
5,000 से बचा.
yeah,
50
B
minus
price is
45.
B price is 20,000, C price is 25, so totally is 45 is coming. Balance is goes to A, so that balance the residual will be treated as a price for A.
Balancing figure, right? So A will be the balancing figure. The total value is 50,000, B is 20, C is 25, so A is 5,000. Okay. So 50 minus 20 minus 25. 50 minus 20 minus 25, 5,000. 5,000 is the standalone selling price. 5,000 the standalone selling price of what? Of A. Using the residual value approach. Using the residual value approach. I hope all these three approaches are clear to all of you. Can any student explain me a summary of allocation of transaction price to various performance obligation? Except Saminathan? Except Anushi? Any student?
Sir, may I?
Yeah, sure. Your name?
Sir, I am Ankit.
Ankit. Yes, Ankit, please. And
So
not to
in
worry,
this,
Ankit, I will support you, right? Not to worry.
yeah, it's okay, sir. So, like in this step 4, we will allocate the transaction price. So, transaction price will be allocated based on the standalone selling price. So, we are required to know what is the standalone selling price of each of the performance obligation. Only then we can allocate. If standalone selling price we don't know, then we have to identify what is the standalone selling price. There are three approaches to find the standalone selling price. First is AMMA approach, that is adjusted market assessment approach. Second is cost plus margin approach, and third is residual approach. By following this method, we can identify what is the estimate SSP, and then we can allocate the transaction price based on that in the proportionate method.
Great, Ankit. Your explanation is better than my explanation, right? So I'm really surprised, and you are so crystal clear, so seamless, right? And I can say that you have explained better than my explanation. Yes.
Thank you, sir. But I got clarity from your explanation only. That's why I was able to speak.
Yeah. So adjusted market assessment approach, cost plus margin approach, and residual approach, of course. Yes. You have explained beautifully that first we need to identify the standalone selling price. And when we know the standalone selling price of the performance obligation, we need to allocate the transaction price into the ratio or proportion of those standalone selling price of the performance obligation. But if we don't know the standalone selling price, we need to estimate the standalone selling price. And there are three methods of estimation. Adjusted market assessment approach, where we got the market price and we adjust as per the company, as per the entity in which the revenue has to be recognized, in whose books the revenue has to be recognized, right? Cost plus margin approach, right, where the entity is aware about the cost of the performance obligation and the entity knows the margin also, then CPMA approach is also a reliable approach. CPM approach is the most reliable approach. Third, if you know the price of the package, if you know the price of the other goods and services, but you don't know the price of one goods or services, in that case, your one goods and services price will be a remaining price, a balancing figure, a residual number, a remainder number, right? So total package price minus price of the available performance obligation, the price available for the performance obligation. So it will give you the price of the, like A, the residual value of that performance obligation. Okay. So this is the concept of allocation of transaction price. This allocation of transaction price is comparatively a smaller step. Okay. Now in this concept, so now we understood this entire concept. So now I will insert more thrill into this allocation. The important concepts are, there are two highly important concepts. And if the question will be complex, and if the question will be for 10 or more marks, right? So then the complexity will be involved in the allocation of transaction price. Friends, concept number one, allocation of discount to performance obligation. Allocation of discount to performance obligation. Concept number 2 is allocation of variable consideration to performance obligation, right? So how to allocate a discount to performance obligation, how to allocate a variable consideration to performance obligation. We will discuss these two concepts, right? So one by one. First, let's discuss allocation of discount to performance obligation. And how to do this, let's understand. The entity is selling a package of goods A, B, and C together for rupees 15,000. The entity is selling package of goods A, B, and C together for rupees 15,000. The entity is also selling a package of B and C at rupees 8,000. The entity is also selling a package of B and C at rupees 8,000. Okay. Determine the transaction price of A, B, and C separately so that revenue can be recognized on these performance obligations separately. Right? So that the revenue, so determine the transaction price of A, B, and C separately so that revenue can be recognized on these performance obligations separately. So what is the total transaction price? 15,000, 15,000. What is the price of B and C? 8,000. Okay.
6,000.
Means the package price. But we need to determine the transaction price of A, B, and C separately to recognize the revenue. And the standalone selling price of all these performance obligation is given 10,000 A, 8,000 B, and 2,000 C. This is given. Okay. So what is the total? What is the total value of standalone selling price? What is the total value of standalone selling price?
20,000.
20,000. What is the total value of the consideration received?
15,000.
15,000. And what is the what this package constitute? A, B, and C put together, right? And what is the smaller package within A, B, and C? What is the
B
smaller
and
package? B and
B
C.
and C.
B and C. B and C is also a smaller package within this A, B, and C. There is a smaller package which is B and C, right? So friends, standard says that whenever there are multiple packages involved, then while allocating a discount to arrive at a standalone selling price, standalone selling price, the final standalone selling price, you need to apply a bottom-up approach. What is a bottom-up approach? What is a bottoms-up approach?
From down to top.
Yes, from down to the top. From down to the top. So in this case, my package 1, in this question, there are two packages. Package 1, A plus B plus C. 15,000 is the transaction price. 20,000 is the standalone selling price. ठीक है ना? Right?
Yes, sir.
So what is the discount in the package number 1?
5,000.
5,000. In package number 2, the transaction price is 8,000. It is given in the question. And what is the standalone selling price? Standalone selling price is 8 plus 2. 10,000. So what is the discount in this case? What is the discount?
2,000
2,000. यहाँ तक आपको समझ आ रहा है ना? Are you able to understand this thing ना?
Yes, sir.
Yes, sir.
So friends, for determining allocated transaction price, the discount first needs to be applied. The discount first needs to be allocated in the smallest bucket, then to the entire contract. Smallest bucket means bottom up approach, down to top approach, bottom up approach. Okay. So I have 3 performance obligation A, B, and C. I have 3 standalone selling price 10, 8, and 2. And my standalone selling price for B and C. First, I will compute my revised standalone selling price for B and C. So my standalone selling price for B and C is 8 and 2, 10,000. So friends, first I will allocate. And what is my total price, my transaction price of B and C? What is
8,000.
my transaction price? 8,000. So what I'll do first? क्या करूंगा सबसे पहले मैं?
Allocate between
8,000
B and C.
divided the ratio of
8,000 multiply by 8,000 divide by 10,000.
10,000.
8,000 multiply by 2,000 divide by This is my revised standalone selling price. Now, my revised price for the package number 1, right? My revised price. So for A,
How we get 10,000, sir?
10,000 of what?
10,000
10,000
how
of
we get?
10,000 of B and C. So what is your question? How to get 10,000 of B and C? ये वाला 10,000.
Yes, sir.
So this is given in the question ना? ये तो question में दिया है. Standalone
Okay,
selling
sir.
price are given.
Okay, okay, sir.
These are given ना?
Okay, okay.
Solution. अब ज्यादा क्लियर हो गया? बीच में
Yes,
मैंने
sir.
सॉल्यूशन लिख दिया. Okay. What is my revised standalone selling price for the larger bucket? 10,000, 6,400, 1,600. Now, what is my total standalone selling price? 18,000. At what value I am selling this package?
15,000.
15,000.
So, what is my allocation? 15,000 multiplied by 10 divided by
18,000.
15,000 multiplied by 6,400 divided by 18. 15,000 multiplied by 1,600 divided by 18. So friends, have you understood this concept of allocation of discount? If there are multiple buckets, if there are multiple packages, then which approach you need to follow for allocation of transaction price?
Bottom approach.
First we go to see the smallest packet, then we go to allocate it, then we go to one by one.
Yes. So you have to apply bottom up approach. You have to apply down to top approach, bottom up, down to top. Okay. So you have to apply these approaches for arriving at the allocation of the transaction price to the largest bucket, right? And you can see we have done step by step. We have done step by step. And let me write here. इसको लिखूं मैं step number 1. थोड़ा और याद रहेगा आपको अच्छे से. Should I write this as a step number 2?
Yes, sir, please.
Step number 1.
I named it as a ladders approach. Ladders.
Yes. Ladder approach. Yes. But ladder is used for, going up and coming down also. So agar wo ladder, if that ladder has been understood in a different direction, then your answer will be wrong.
Look, only identifying the price, we are going ladder.
Okay. Yes. Anyone who has any doubt, who has any problem, anyone for allocation of discount to the performance obligation? Anyone
No,
if
sir.
has any doubt?
सर आई हैव अ क्वेरी.
Yes.
सर इसमें जैसे ये ट्रांजेक्शन प्राइस अगर दी हुई नहीं हो तो सेपरेट जो दे रखे 10,000, 8,000, 2,000 तो उसके लिए रेजिडुअल अप्रोच यूज कर सकते हैं.
अगर आपकी ये ट्रांजैक्शन प्राइस दी नहीं होती, if the transaction price would not have been given, that is what you are asking. Yes, in that case your B and C is 8,000 and your A should be 7,000. But how to allocate between A and B? B and C. B and C में allocate कैसे करोगे? How to allocate between B and C? आपको उसका identify तो करना पड़ेगा ना. So for B and C you need to estimate the standalone selling price. For A, you can go with so for B and C, you can either use AMMA approach or CPM approach, cost plus margin approach. For A, you can use this residual approach also, right?
ठीक है सर.
Understood? वो तो करना पड़ेगा ना.
यस सर.
Between B and C, you need to allocate ना. Otherwise, how you will do? That you need to allocate ना.
एंड इट विल बी गिवन इन द क्वेश्चन सर.
हाँ, it will be given in the question. Okay. अगर नहीं दिया होगा तो एक का नहीं दिया होगा. ओके, बट हो सकता है बाकी का दिया हो.
सर यहाँ बी और सी की 2 आई ना स्टैंडअलोन सेलिंग प्राइस.
Yes, B is 8,000, C is 2,000, and the total value of B and C put together is 8,000.
सर रिवाइज स्टैंडअलोन सेलिंग प्राइस 2 हो गई ना बी और सी की.
No, we will take last one, na sir. Step 2 wala.
Yes, so you have to take. So this is the revenue. This is the revenue for B and C. Yes. So initial standalone selling price for B and C was 8 and 2. Then it will revise to 6,400 and 1,600. Now it will be revised to 5,300 and 1,300. Right? Okay.
Okay, sir.
So this is the final. So your revenue is going to be recognized, your revenue recognition. Revenue recognition. यार आप लोग कितनी मेहनत कराते हो मुझसे. You guys are, you guys ensure that I should work hard. Right? Okay. Now the second concept. And believe me, second is the
ये
most.
1000 किस तरह है SSP में?
What is the SSP? Sorry.
स्टेप सेकंड में SSP A का जो 10,000 है.
Yes. Yeah. So what is your question? What is your question?
सर ये SSP in step 2 is 18,000 totality.
Yes.
Or 10,000. Why we take the 18,000?
So because, first what we have done. So first we have allocate our discount to the smallest bucket. Right. So first of all, let me explain this transaction again to you. This company is selling a package A, B, and C put together. And this company is selling this big package A, B, and C and small package B and C. Right. Three values have been given to you. Number one, the total of standalone selling price of 20,000. ये clear है? ये clear है? 10, 8 and 2?
Yes, sir.
Then, what is the total consideration this entity is receiving? इस entity को total कितना consideration मिल रहा है?
15,000.
Consideration from customer is 15,000. This entity is receiving a consideration of 15,000 rupees. Okay. And one more value is given. B and C. And what is the price? What is the standalone selling price of B and C package? Package का कितना price है?
8,000.
8,000. It is given in the question, na 8,000. Right? But what is the standalone selling price of B and C?
It is 10,000.
8 plus 2, 10,000. So this is the smallest package. This 10,000 of goods are sold at 8,000. What does it mean? It means there is a 2,000 rupees of discount is inbuilt in the smallest package also. So what I did, I have computed the revised price. That what should be my revised standalone selling price. My revised standalone selling price comes out at 6,400 and 1,600. So I have allocated the price of the package B and C in the ratio of the standalone selling price of B and C. So I got the revised price, right? So for my larger packet, for my larger bucket A, B, and C, my revised standalone selling price 6,400, C is 1,600, and of course A is 10,000, right? So this become 18,000. And finally, so what I'm collecting, I'm not collecting 8,000, I'm not collecting 20,000, I'm not collecting XYZ number, I am collecting 15,000. So finally, I'm allocating this 15,000 rupees into the ratio of A, B, and C. And of course, while computing the ratio, I have taken the revised standalone selling price of B and C. Is that clear, Mamta, or not clear?
Yes, sir.
If still it is not clear, let me know if you have any specific query. अगर अभी भी clear नहीं है तो कोई बात नहीं, but मुझे बताइए अगर कोई specific query है आपकी. Yes or no? Clear, not clear? Completely clear, not clear?
Yes, sir.
Completely clear? Shall I move forward? Okay. Okay, yeah. Allocation of variable consideration to performance obligation. Friends, now you understood the meaning of variable consideration. पता है ना? सुना सुना लग रहा है या सुना सुना लग रहा है? Is it something which is heard or is it something which is blank?
सुना लग रहा है सर, सुना नहीं लग रहा है सर.
अच्छा, सुना सुना लग रहा है, सुना सुना नहीं लग रहा. So it is something which is heard, right? Variable consideration is a consideration which is dependent on the happening or non-happening of some future event, right? So, taking an example, A Limited has entered into a contract with B for construction and maintenance service for 5 years for its house. Okay. A Limited has entered into a contract with B for construction and maintenance service for 5 years for its house. So how many performance obligations are there in this case?
Single
Two, sir.
performance.
One construction and one is maintenance.
One construction and one maintenance. Very good. 2 performance obligation. Construction of a house is a different performance obligation, distinct from the maintenance, right? So maintenance is not dependent on the construction. Okay. So basically it is separate, distinct goods and services within at an individual level and at the context of the contract also. So any doubt कि it is not separate? Separate पे कोई doubt तो नहीं है ना?
नहीं सर.
Any doubt on the separation? No doubt?
No, sir. Clear, sir.
Very good. So A Limited has offered B that it will give him incentive of rupees 5 lakh for early completion of construction of the house. B has a track record of early completion. So friends, A Limited has entered into a contract with B for the construction and maintenance for 5 years for its house. So construction is, of course, construction will complete and then this A Limited will provide a maintenance service for 5 years also. A Limited is requesting that please, can you please construct and hand over my house before Diwali? If you will be able to deliver, I will pay you 5 lakh rupees incentive, 5 lakh rupees bonus more. And B has a track record of early completion. Friends, in this case, there is a fixed consideration and there is a variable consideration. In this case, there are 2 performance obligations, construction service and maintenance service. So whether fixed consideration is there for both the performance obligation? Fixed consideration
Yes,
is
sir.
there? Of course,
Yes, sir.
Fixed consideration is there, yes. Now coming to the variable consideration. Whether this variable consideration of 5 lakh rupees, whether this 5 lakh has to be allocated to both the performance obligation or this 5 lakh rupees should only be allocated to the construction service. What is your view?
Only to the
It is
construction.
only pertaining to construction, sir.
It is only pertaining to the construction service. So this variable consideration will not be allocated to all the performance obligation. This variable consideration is only related with the construction service. So when you compute the transaction price of construction service performance obligation, then you should take into account 5 lakh rupees, which is related to construction service. But when you do maintenance service, then only fixed consideration, no variable consideration. Clear? Is it clear or clear?
Yes, sir. Clear.
Clear in mind, sir.
Clear in mind? Okay, now let's discuss illustration number 56. Let's discuss illustration number 56. Okay. Should I discuss illustration number 56?
Yes, please.
Yes, sir.
Allocation of variable consideration. An entity enters into a contract with a customer for 2 intellectual property licenses. Okay. License A and B, which the entity determines to represent 2 performance obligations, each satisfied at a point in time. The standalone selling price of license A and B are 16 lakh and 20 lakh respectively. What is the standalone selling price?
16 lakh, 20 lakh.
16 lakh and 20 lakh rupees separately. The entity transfers license B at inception of the contract and transfers license A 1 month later. Okay. So there are 2 licenses, 2 separate performance obligations, correct? And license B has been transferred at the inception of the contract and license A has been transferred after 1 month. So at the inception of the contract, whether both the revenue, license A and B, both of the revenues are recognized or only license B revenue is recognized?
Only license B.
Why not license A? Why not license A?
Because the control is not transferred.
Because the performance obligation is not satisfied. right? In the language of Ind AS 115, this performance obligation has not been satisfied. The control has not been transferred. Very good. Variable consideration allocated entirely to one performance obligation. The price stated in the contract for license A is a fixed amount of 16 lakh, and for license B the consideration is 3% of the customer's future sales of the product that use license B. So what is the price for license A? License A का price क्या है? What is the price for license A?
16 lakhs.
16 lakh.
16 lakh is the price of license A fixed amount. And for license B, what is the price?
It's 3% of the sales that will come due to license B.
3% of the customer future sales. 3%. Okay. For purposes of allocation, the entity estimates its sales based royalties, that is the variable consideration, to be 20 lakh rupees. Allocate the transaction price. Okay. So sales, so basically it is like a royalty. It is like a royalty which is 3% of the future sales. And the entity estimate the sales based royalty, which is variable consideration, at 20 lakh rupees. Allocate the transaction price. What will be the transaction price in this case? बताइए क्या होगा transaction price? What will be the transaction price in case of case A? Friends, in case of, there are two performance obligations, we all are clear. License A, license B. License A will be delivered 1 month later. License B is delivered at the inception of the contract. Right? So in this case, license A is sold at 16 lakh rupees fixed consideration. License B is on the basis of sales based royalty variable consideration 20 lakh rupees. So how the revenue will be recognized? The revenue will be recognized when 1 month later this license A will be transferred at 16 lakh rupees, and for license B the revenue has to be recognized at 20 lakh rupees. Simple. ठीक है ना?
Yes, sir.
What about case B? The second scenario. The first scenario was very simple. The price stated in the contract for license A is a fixed amount of rupees 6 lakh. And for license B, the consideration is 5% of the customer future sale of the product that used license B. The entity estimate of the sales based royalties is rupees 30 lakh. Here, license A is transferred 3 months later. The royalty due from customer first month sales is rupees 4 lakh. The price stated in the contract for license A is a fixed amount for 6 lakh, and for license B the consideration is 5% of the customer future sale of product that use license B. The entity estimate of the sales based royalties, that is variable consideration, is rupees 30 lakh. Right. Here license A is transferred 3 months later, which has a fixed amount of 6 lakh. Right. The royalty due from the customer's first month of sales is rupees 4 lakh. Allocate the transaction price and determine the revenue to be recognized for each license and the contract liability, if any. So what is my case B? Let's understand this. Friends, in the case B, what is my fixed price of license A? 6 lakh rupees. What is the consideration of license B? 30 lakh. 30 lakh, na? Yes. It is a sales based royalty. It is a variable consideration. My license A is sold 3 months later. My license B has been sold upfront. Clear? Clear?
Yes, sir.
What is my standalone selling price?
16 lakh 20.
16 lakh and 20 lakh is my standalone selling price. Initially, the company has received rupees 6 lakh. Initially, the company has received 6 lakh rupees. Okay. So, the company has received 6 lakh rupees initially. What is written? The price stated in the contract for license A is a fixed amount of 6 lakh, and for license B the consideration is this much, right? So how much amount this entity has received? For this total contract, the entity has received 6 lakh rupees. The entity has received 6 lakh rupees, right? So how this 6 lakh is going to be allocated? This 6 lakh is going to be allocated in the ratio of 16:20 lakhs. 36 lakh has been allocated in the ratio of this 16:20, 266 and 333. Why? Y. And how this allocation of 4 lakh will happen? This 4 lakh will be allocated in the ratio of this. So what is my recognition of revenue for license number B? Because license number A has not been transferred. License number B, customer account debit to revenue from sale of license B. Okay, 333. Now, recognition of royalty revenue, customer account debit to revenue from royalty of license B, sale of license and royalty of license, 222. 3 months later, license A has been delivered. Customer account debit to revenue from sale of license A and revenue from royalty of license A. Right. This is how it is going to be allocated. Friends, have you understood this question? Have you understood this question?
Question not understood on the first stage, sir. The thing is that still I am having need clarity on that. Why 6 lakhs is allocated to both? This particularly is given for A.
Yes. So friends, again, you know, what was the difference between Ind AS and AS? The basic difference?
It is a
AS said how to record. India says where to record.
So Ind AS is very detailed, right?
Yes, sir.
Accounting standard has given you very limited guidance. Ind AS has given you very detailed guidance. When I teach accounting standard 9, right? So I used to teach accounting standard 9 in 2 hours, 2 hours maximum. In one class, 2 to 3 hours maximum. But when I'm teaching Ind AS 115, I'm taking 18 hours, 6 classes, 3 hours each, right? So, you know, what entities were doing, if you read this question, right? Ind AS is a customer-centric standard. Ind AS is a customer-centric standard. Ind AS is a substance-based standard. If you read this question, in the first paragraph, the standalone selling price of 2 licenses were given. And what was the standalone selling price?
16 lakhs
16
of
lakh
A,
and 20
20
lakh.
lakhs B.
16 lakh and 20 lakh rupees. Okay. Then when you go to the first scenario, when you go to the first situation talks about that license A has a fixed amount of 16 lakhs stated in the contract. And license B is on the basis of sales-based royalty, 20 lakh rupees. So the amount stated in the contract was commensurating with the standalone selling price of the goods and services, right? Yes or no?
Yes, sir.
Yes. When you go to the scenario number B, don't you find that while the standalone selling price is 16 and 20, right? But for license A, they have only said that the fixed amount is 6 lakh. And for license B, they have said that the royalty based amount is this much, 30 lakh, right? Sales based royalty is 30 lakh. That is what they have told. So don't you think that the price of license A is depending on price B and price of license B is depending on license A? Means the total value of the contract is 36 lakh, 16 and 20, right? And this is what this entity is getting also, 6 plus 30, right? मैंने बोला, I told Neha that Neha, I will sell you 2 products, mobile and laptop, 2 products, mobile and laptop. And I told Neha the price of mobile is 10,000, the price of laptop is 40,000. Standalone selling price, market value. And I'm also collecting 50,000 rupees from Neha. But computer or laptop, I am selling her upfront. Mobile, I told her that I'll give you after 3 months. Okay. And in the contract, this contract is between me and Neha, right? So till the time she is paying me 50,000 rupees, I am okay, right? And till the time the customer is paying in terms of market value, customer is also okay. So I told Neha, can you do one thing? the laptop price is 40,000 rupees and the mobile price is 10,000 rupees, standalone selling price. So should we write in the contract the mobile price is 5,000 and the laptop price is 45,000? She told me, sir, I don't have any problem. Till the time you are asking 50,000 rupees, I don't have any problem. Right? So the standalone selling price of mobile was 10,000, but in the contract it was written at 5,000 rupees. But the money which has been collected from this contract is equivalent to the standalone selling price. So don't you think that in this contract there is a nexus, and this variable consideration should be allocated to all the performance obligation? Don't you think so? Yes. So this is what you need to interpret from the question, right? And if require, you can write this as an assumption also. Okay. So friends, standard says that when the money received, right, by way of fixed consideration as well as variable consideration, it is in line with the standalone selling price of the goods and services, but in the contract, so one of the performance obligation has been stated at a significantly lower price and the another one is at a significantly higher price, then you need to look from the context of the contract and you need to allocate this entire money into the different performance obligation. Is that clear? Is that clear, my dear friends? Is that clear or not clear? So this
Yes,
is
sir.
how this 6 lakh rupees and 4 lakh rupees and 4 lakh rupees has been allocated.
Yes, sir. Now it's very much clear, sir. The 6 lakhs rupees is a fixed amount which is received. We are allocating based on the
Yeah.
SSP.
Yeah.
And 30,000 is a variable consideration for which we are going to receive. However, we received only 4 lakhs now. So that the 4 lakhs we are allocating based on the SSP.
2 thumbs up to you, Saminathan. And again, your explanation is better than my explanation.
Not like that, sir. I am observing your point, sir. Then only I'm keeping it in mind and I'm able to reproduce.
So friends, these are the concepts. These are the concepts on allocation of transaction price to various performance obligation. I hope you found these concepts useful. I hope you found this concept useful. Yes. Any question? Any question up to this class? Any concept where you haven't, where you are not having any clarity? Please let me know.
Sir, in this question number 56, like this percentage are given 3% or 5%. So is there any use of this?
3% and no,
5%?
since the outcome is already given, there is no use. Right. अगर outcome नहीं दिया होता, if outcome would not have been given and they have given 3% royalty will be given on the basis of sales, the sales is 1 crore, then you need to compute 1 crore multiplied by 3% or 10 crore multiplied by 3%, whatever. So there is no use of that. They are only telling you that it is a sales based royalty, but the numbers are final numbers are also given. Okay.
Sir, तो means ये 20 लाख जो है, so it is like 3% of the sales value, क्या?
It is like a 3% of the sales value. Yes.
Okay. Now clear, sir. Thank you.
और ये पूरे ईयर का है ना?
हाँ, इस कॉन्ट्रैक्ट का है, मतलब इसमें कहीं ईयर का कोई लेना देना नहीं है. दिस इज अ कॉन्ट्रैक्ट प्राइस. ये लाइसेंस ट्रांसफर कर रहे हैं ना, सो दिस इज अ कॉन्ट्रैक्ट प्राइस. ओके. So in the question, it is not talking about the year and it only talks about that. If you will see, it talks about that. कहाँ गया? Just a minute. हाँ, it talks about for the consideration 3% of the customer future sale of products, right? So the question is not asking you the year wise anything. It's a contract price. Okay. Any other question, friends? So friends, we started our journey today with the fourth concept of transaction price, which is consideration payable to a customer. And then we have moved to the allocation of transaction price to various performance obligation. It has to be allocated on the basis of standalone selling price of the multiple performance obligation, right? And if you don't know the standalone selling price, you need to estimate the standalone selling price by using the AMMA approach, CPM approach, and RA approach. Adjusted market assessment approach, cost plus margin approach, and residual value approach. And students, This adjusted market assessment approach, right? Cost plus margin approach and residual value approach, please go through with these examples. These examples will give you a conceptual clarity, right? Believe me, if you apply a ratification model, right, it will be sustained for a shorter period of time. But if you will apply a conceptual clarity model, it will sustain in your brain for majority of your life, right? मतलब longer period of time तक तो रहेगा. Okay, friends, then we discuss the concept. If there are multiple buckets, if there are multiple packages, buckets involved in the question, then we have to apply a bottom-up approach for allocating the transaction price to various performance obligation. We start with the lowest bucket, and then we move to the largest bucket to allocate the transaction price to multiple performance obligation. And friends, we have also understood the allocation of variable consideration to the performance obligation. So we need to allocate the variable consideration to only those performance obligation to which it relates. For example, there are multiple performance obligation, but every performance obligation does not have necessarily to have a variable consideration. Okay. And then we have discussed this illustration number 56 from ICAI study material as well. Friends, please let me know if you have any question or you want me to revise any concept. Please let me know. Any question?
सर ये एक्सेल फाइल को एक्सेस कैसे करना है?
एक्सेल फाइल को एक्सेस कैसे करना है? So Board of Studies will upload this Excel file on the portal. Okay? जो आपका पोर्टल है, पोर्टल पे एक्सेल फाइल अपलोड आपको मिलेगी, वहां से आप उसको डाउनलोड कर सकते हैं. Okay. Any question? Any further question?
No, sir, not from. Firstly, I'm very much thanks to you, sir. You are extending one more class for on Sunday. It's very much appreciated, sir. Thank you.
Thank you so much. So, friends, are we meeting on Sunday? Will you guys join me on Sunday?
Yes, sir.
Sunday
Yes, sir, definitely. Yes, sir, definitely.
We'll be happy to join.
Yes, sir.
Sunday evening, we all will sit together with a cup of tea. Okay?
Yes, sir.
Yes, sir.
But the only thing is, we will have a cup of tea from our places, from distinct places. So I will be from my place in Gurgaon, you will be from your places. And it has to be cooked, or the tea has to be made distinctly from different houses. Okay? Yeah. So
Okay.
good to see you. We'll be happy to see you guys on Sunday. On Sunday, we'll do a lot of question as well. Lot of question we'll do on Sunday, right? On Sunday,
Sir, I have a question.
Sorry?
I have a question.
Okay.
I have a doubt on this question. The last question is illustration 56.
Yeah.
So the difference of 6 lakhs has been allocated between license and B. That I understood.
Yeah.
But how did this 4 lakh come from? The another
So this-
4 lakh will...
Yeah, so let me tell you. The total royalty based fee is 30 lakh, right?
Yes, yes.
Yes. But in the first month of the sale, the collection is 4 lakh only. So you have collected only 4 lakh rupees. And it is a variable consideration, a sales based royalty. So whatever you will collect, you will recognize that only. Na? The collect means the royalty which is due.
Okay.
I'm also author of a book. Okay. And my book is sold in the market. And I'm getting a sales based royalty. So in the first year, 500 copies were sold. So I got a royalty of 500 copies. My royalty is due for 500 copies. I got the royalty after completion of a year. But how much revenue I have recognized? I have recognized the revenue to the extent of 500 copies. Okay. So this is given in the question.
Okay. Okay. Thank you.
Okay.
Sir, this 30 lakh represent 5% of future sale, no?
Again, yes.
In case B.
Yes.
Yeah.
So it is a royalty amount. It is a variable consideration amount. So thank you, student. Thank you so much. Right. And I'm glad that you guys are able to engage, participate, and you guys are able to answer the questions as well. Okay. So are you finding these classes as a private classes?
Yes, sir.
More than private class, sir.
More like
Yeah.
So these
Yes.
classes are very fruitful to us. We'll surely be able to write the answers in exams now.
Yeah.
And
So
it is
are you
more
able to connect the teacher virtually? Right?
Yes.
All the questions have been answered? Okay.
Yes,
Yes,
sir.
all
Very
the
much,
Very
sir.
good. Very good. So please circulate these feedbacks to ICAI also and to your friends as well, so that more and more participation will be there, and everybody will get benefit of these classes. Okay. Yeah. Thank you
Yes,
so
sir.
much. Thank you so much. Stay safe. Stay happy. Bye bye. Take care.
Thank you so much, sir.
Thank you.
Thank you,
Have
sir.
a great day.
Thank you. So Ashokji,
Thank you,
session is
sir.
over.